already in that decelerating upward revision pace, and about half the sectors are contributing to that right now.
A slowdown of some degree is not necessarily a terrible thing for the economy as a whole.
If there's not as much slack in the labor market, inflation could still potentially be stubbornly high.
Inflation is likely to run ahead of expectations, but I think it'll settle out at around 3%.
We just got to keep pushing on this recovery long enough to get back to where we should be.
This is Bloomberg Surveillance with Tom Keene, Jonathan Ferro, and Lisa Abramowicz.
Live from New York City for our audience worldwide. Good morning, good morning. This is Bloomberg Surveillance, live on TV and radio alongside Tom Keene and Lisa Abramowicz. I'm Jonathan Ferro. Equity futures down 13 points on the S&P, negative 1/3%. Tom, it's got the feel of June 2015, where every single morning you'd wake up and see where China closed. And I can tell you right now, the CSI 300 down another 4 percentage points on a Hang Seng. The CSI 300 down another 3.5.
We got a chart out there somewhere. I don't know if we have it in the control yet in the Hang Seng Index. I compared it to the pandemic, John, and we're almost back to pandemic levels in Hang Seng. I get it's upset. I get it's correlated, but I'm going to suggest, John, there's more going on than China here. This is a complex moment.
I thought you were going to add to something then, Tom.
No, I was going to add to something.
That's how you finish the sentence.
Well, I think for radio it's important.
Okay.
I wore my beige suit today for Tim Cook. I called up Cupertino. I said, how do I dress on the day of Apple's earnings? And they said, dress casual.
The man from Del Monte says, yes, okay,
Yes,
we'll move on.
just casual.
Lisa, I think investors trying to work out what the transmission mechanism is for this pain we're seeing take place in Chinese equities. And for the foreign investor, just a simple one. Do I care, and why should I care?
And what you are seeing is people are taking their money out of Chinese assets because, frankly, there is this feeling that are some of these assets uninvestable when you don't have a sense of what could be coming next. And the fact that, frankly, Xi Jinping is so committed to his agenda that he's willing to torpedo some of the biggest powers economically in the nation is a very strong message, Sean.
UPS out with earnings, second quarter adjusted EPS $3.06, the estimate $2.83. Looks like a little bit of a beat there, Tom, on revenue. Second quarter revenue $23.4 billion, the estimate $23.21 billion. And that takes us to the next stop. The earnings after the bell, Microsoft, Apple, Alphabet. Take your pick this week. Big tech reporting through the week, Tom.
We're going to know more at 5 p.m. this afternoon. This is going to be really important. Of course, the close will go beneath all the headlines there, give you a richer view than just the headlines of sales and revenues. John, it is an important day because it reaffirms America's tech dominance, but it also says how much the other groups of stocks are struggling.
Let's whip through this price action just to kick off Tuesday morning, Tom. Equity futures on the S&P 500 down 14 points. We're negative 1/3 of 1%. Outside of that, into the bond market, a bid firmer. Treasuries yields lower by 3 or 4 basis points, Lisa, to 125.28. And the euro just a little weaker again. Dollar stronger, euro dollar 117.79.
And we're going to talk about these 10-year Treasury yields and, frankly, the real yield, which is hitting another all-time low. And the big question in my mind is, how much does this actually tell us? Is this a read on the economy, or is this something else that's perhaps fueled by the dynamics in the market? I know we're going to be speaking about that with Brian Weinstein coming up. Today, also coming up, 8:30 a.m., we're going to be getting U.S. durable goods orders for the month of June. The expectation is for strength. People want stuff. Companies are trying to supply it. There could be signs of some of the supply chain disruptions, how much they are increasing, decreasing. Any kind of read on that will be very helpful to know how those inflationary pressures, how long they will persist, and how significant they are in terms of restocking and supplies. Then at 10 a.m., you get the consumer confidence figure for the month of July. This, to me, is going to be one of the key indicators. How much are people ratcheting back expectations for employment, their confidence regardless of inflationary pressures? All of these aspects that actually have more forward guidance in some ways than the data that we get on a regular basis that actually is backward looking. And I think that this is something that even the Fed has talked about taking a look at. And then, John, as you were talking about, after the close, we are going to be getting a slew of big tech earnings, Apple, Alphabet, and Microsoft. With Apple, the key is going to be iPhone sales and how much they are picking up or not. With Alphabet, it's going to be ad revenue and what that looks like in a post-pandemic world. And with Microsoft, I'm particularly interested in the cloud computing unit, the Azure unit, how much they're getting dominance, particularly with Amazon's AWS, John.
Speaking of dominance, those three names on the NASDAQ 100, 1/4 of the weighting on the NASDAQ 100. Just those three names, Lisa, alone.
Yeah, and honestly, I also wonder about, regulatory pressure, what they say with respect to that, especially what we saw yesterday with the U.S. Torpedoing one of the recent transactions that have been approved with insurance brokerage. But I also do think that any indication that they give about the China crackdown on big tech, what this means for them will be really notable.
We'll talk about that a little bit later in the hour. Tom, Apple, 11.4% of the NASDAQ 100. Microsoft, about 10% of the NASDAQ 100. Alphabet, a little more than 4% of the NASDAQ 100.
They will address, John, all those worries that Lisa mentions, but what they will really address is their complete, total dominance of what's out there. You talk to the experts, they say, well, maybe not the regulation, this, that, and the other thing. The fact is, John, everybody got this call wrong in January and February of this year. A major shout out to John Golub of Credit Suisse, who stood up on a table in, I think, January and screamed, don't sell these puppies.
I'll catch up with Mr. Golub a little bit later on Bloomberg
That's why
TV.
I did it, John. I was promoting your property.
I'll ask him about that note that came out earlier in the year, Tom. Don't sell these puppies. Brian Weinstein joins us now, Morgan Stanley Investment Management Head of Global Fixed Income. Brian, allow me to start with a line from my colleague, good friend Ira Jersey over at Bloomberg Intelligence. He wrote this back in May. Quote, the Fed now owns almost a quarter of the TIPS market, up from 10% at the end of 2019. Brian, can you help us understand this a little bit better? When people come on the program and talk about record low negative real yields in America, how big is the role of the Fed in this story?
Yeah, they definitely helped. If you look back to first QE, they stayed away from the TIPS market because the TIPS market is not that big. It's very easily moved. But I think, Jonathan, if you think about average inflation targeting, right? What did the Fed tell you to do? They told you, well, on the margin, we should own TIPS over regular treasuries. So I think they're helping it not only with what they're buying, but with their language.
What does this large negative real yield mean to the real banking system?
I think it means you have to do anything you can to try to get money out to earn a positive real yield. I mean, that's really the point, right? It just means that the average dollar sitting there is going to lose money in real terms. So you can't leave things sitting around. It forces you out the yield curve. 125 nominal 10-year notes is a result of that. I think higher tech valuations is a result of that. So I think it just continues to push money through the system out into riskier assets.
There's also a question, Brian, of what the negative real yields are telling us about the economy. And I think that John's question is a really salient one, this idea of how much are the fundamental dynamics, in particular, a lack of liquidity, some of the big price swings that we've seen on very little news, more of it what's at play here than anything else. Is that what's been driving the market that has been so dominated by a Federal Reserve with a balance sheet of $8.2 trillion?
I always hesitate to ascribe too much to technicals. In other words, I have to imagine there are other things going on, right? The last couple times I was on, the inflation noise had gotten so high. I think people had gotten underweight. And then I think growth is peaking. So it's not just technicals, but I think certainly you take supply out of a market, you tell a market that you're going to create inflation, and you can artificially increase the price of things pretty dramatically. So I would say technicals is a part of what's happening for sure. But also I think the growth scare, the China scare, the Delta variant. Listen, we think rates should be higher, right? I think these are all technicals and a couple fundamentals in a quiet market. But I think the net result will be rates will start to reverse over the next few months and move higher.
How many times have we heard that over the last 10 years, Brian? We think rates should be higher. You won't be the first, you won't be the last. I'll hear it again and again and again for the next several months. You mentioned the China scare. Let's go there. Hang Seng down by more than 4% of the close today. CSI 300 down 3.5%. The CSI 300 is down almost 8 percentage points in just 3 sessions. Now, Brian, many people stateside, right here in America, focused on American markets, will be asking the question, why does this matter to me? What do you think is the dominant transmission mechanism, if there is one, that you'd be concerned about at the moment?
Yeah, it's a great question. I think a broader risk off, right? And we saw it last week for a few brief moments where U.S. equities started to weaken as well, and treasuries really gave up the ghost and went down towards 1.1%. It's a very dangerous place, as you said, John, to start with, well, rates are too low, because that suggests they can't go lower. Rates are here for various reasons. And I think if that equity scare continues and it hits the U.S. markets, rates will fall again. I mean, again, people are underweight. Everyone expects them to go up. So it is crowded, it is summer, it is quiet, it is illiquid, and the Fed is buying. So I think a risk-off position could force Treasury rates to go even lower. So I think you have to be patient and realize that this is not a one-sided or one-way opportunity.
Hey, Brian, it's good to see you. It's good to catch up. Brian Weinstein there, Morgan Stanley Investment Management Head of Global Fixed Income, as the Federal Reserve down in Washington, D.C. kicks off a two-day meeting, Tom Keene. That meeting, of course, concludes tomorrow with a news conference with Chair Powell.
John, I would suggest the meeting has changed because of COVID, because of the Delta variant, because of the news from Mayor de Blasio from the state of California. John, I'm sorry, it's a changed meeting from where it was 4, 5, and 6 days ago.
I agree with you, but do you think the argument of President Bullard and others has changed? Because their view is that the decision to initiate a program that basically meant $120 billion of purchases every single month, Tom, was in the context of a crisis that we no longer have. And I just think that that argument is still there, and probably an argument that will still be made through the next 24 hours.
That argument definitely can be there because whatever the debate we had yesterday, John, off the Goldman Sachs and Morgan Stanley, Deutsche Bank takes on the trail of this boom economy, the fact is we're in a boom economy right now. Even if we come in soggy, John, 6 weeks ago, 6 weeks ahead, it's still a boom economy.
I guess the difficulty right now for the Hawks, Lisa, is that the recruitment effort through the next 24 hours for President Bullard and Kaplan might be increasingly difficult given what we're seeing.
The Hawks are not going to get majority in terms of the push on the Federal Reserve. That said, I am curious about how much recognition there is that people are more worried about inflation and that wages are not keeping pace with the increases that we're seeing in common goods that people have to buy. I mean, there was a story in the Financial Times citing UBS's Matthew Mish talking about the rising inequality in wealth. Frankly, very much on the heels of Fed policies that have improved the prices of assets. You just wonder how much this is giving Fed officials angst.
How do you think the pay negotiations go through the next 12 months when people step up and have those conversations with their employers? Do you think their employers reach for the research of the Federal Reserve, Lisa, and explain to their employees that it's transitory?
I'm going to count on that.
It's going to be interesting to see what happens. I think it's going to be really interesting to see what happens.
I think that, frankly, companies are going to be saying it's going to crimp our margins, it's going to hamper our ability to expand. There's going to be that story, which we've heard again and again.
Coming up at 7 a.m. Eastern Time, Julian Emmanuel, BTIG Chief Equity and Derivative Strategy on this market, which is coming into Tuesday at all-time highs on the S&P. We're down a third of 1% on futures from New York. This is Bloomberg.
With the First Word News, I'm Laura Wright. The two Koreas have agreed to rebuild ties. That could lead to a possible opening for President Biden to push for a breakthrough in stalled nuclear talks. North Korea's Kim Jong-un and South Korea's Moon Jae-in have been exchanging letters. They have reopened hotlines that had been silent for a year when Kim's regime symbolically blew up a liaison officer funded by South Korea. In Tokyo, a grim new record. The number of coronavirus cases in the Japanese capital hit a record today, more than 2,800. The surge comes as tens of thousands of visitors are in Tokyo for the Summer Olympics. Only about a quarter of Japan's population is fully vaccinated. President Biden says the American combat mission in Iraq will be over by the end of the year. Still, the U.S. is expected to keep a military presence on the ground. The president met with Iraq's Prime Minister Mustafa al-Kadhimi yesterday. American troops in Iraq have been gradually transitioning into an advisory and training role. In China, shares targeted by Beijing's regulatory crackdown extended their sell-off onto a third day. Technology and education shares retreated once again, while property stocks also fell. Tencent holdings slumped over 6%. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Laura Wright. This is Bloomberg.
I'm fully committed to passing a bipartisan infrastructure bill. Senators should be on notice that the Senate may stay in session through the weekend in order to finish the bipartisan infrastructure bill. And as I've said before, further delays may mean that the Senate will remain in session into the previously scheduled August recess.
Senate Majority Leader there, Chuck Schumer, from New York City this morning. Good morning. Alongside Tom Keene and Lisa Abramowicz, I'm Jonathan Ferro. Tuesday morning, here's the price action on the S&P 500. Coming into Tuesday at all-time highs on the S&P and on the Nasdaq too. We are negative 14 points lower by 1/3% on the S&P 500. Firmer Treasury market, a bid into Treasuries. Yields lower by 3 or 4 basis points. We are down to 1.2511, 125.11 on a US 10-year yield. A speech taking place in the last couple of moments, Tom, from the US Defense Secretary Lloyd Austin in Singapore, criticizing China, going on to say, and here's the headline that sticks out for me, Tom, from Secretary Austin, warning against the specter of coercion from rising powers. This going along with something a US official said yesterday, reportedly, to the Chinese, Tom. So this one's starting to build this week.
We stopped the show on economics, finance, investment, and we look at the United States international relations. General Austin in Singapore. John, this is as Duterte fights for his life in Philippines with his final State of the Union address. And what we're talking about here, to go to Anne-Marie Hordern, is the exhaustion of the United States Navy. This is about Austin in Singapore, the USS Nimitz, and Anne-Marie Hordern finally home after 341 days at sea. This is showing the flag, and Anne-Marie Hordern, it costs money.
Yeah, it certainly does, Tom. And I would just say that also optics of this speech right now, as you have Mr. Austin there in Singapore, you have the Deputy Secretary of State, Wendy Sherman, who is in China for talks. And these talks on those heels of the Alaska meeting with China were very acrimonious. So you do see the push from this administration, especially this week. We're also going to have Secretary of State Tony Blinken headed to India, a push towards Asia, making sure we shore up, the United States shores up their allies as they try to confront and have a little bit more of this challenge with Beijing.
Does the Biden administration have a cogent South China Sea policy?
What they have right now, Tom, and they are still working on their China policy. We haven't heard as much about the South China Sea, but what you have heard is that one of those Trump tariffs that were put in place have not been taken off. Many were expecting potentially a softer Biden administration when it comes to the trade policies. We still have sanctions on many Chinese officials, and of course, the latest being what's going on in Hong Kong, with the United States telling investors and businesses there that they should be careful when dealing with Hong Kong and issue this this memo basically saying that if you're in Hong Kong, make sure you're aware of what's going on legally with the Chinese Communist Party.
These issues, Anne-Marie, at the epicenter of foreign policy for this administration, as it was for the last one in many ways as well. Also at the epicenter of domestic infrastructure spending, apparently as well. But I haven't heard that for a long, long time. When it comes to infrastructure spending, there was a focus initially on the rising force that is the Chinese economy and the Chinese Communist Party, and what we needed to do at home to protect this economy from that. What does that conversation sound like now?
That conversation is still in focus, John. When you hear the president, especially when he's out touting his infrastructure plan, he will mention we need this to take on and challenge a bigger, more the economic weight of China. When you really heard that in Congress and on the Hills, when they were specifically targeting these Chinese bills in the Senate and in the House, this is when you heard that kind of rhetoric. It's still there lurking, but right now, infrastructure, they're trying to figure out how they're going to pay for it. There's a number of snags that the administration is hitting with Democrats and Republicans to get the bipartisan infrastructure deal done when it comes to transit, when it comes to water. So right now, it's a little bit more about the details, not the broader impact of why they want to boost American infrastructure.
And shockingly, they seem to be missing each of their deadlines as they struggle to come to agreements and everything from water policies and spending to public transportation. Anne-Marie, just sticking with domestic policy, I want to get your read on a recent Department of Justice memo following the mask mandates and the vaccination mandates for employees of New York and California. The Department of Justice yesterday came out and said basically, even though this is an emergency approved vaccine, it does not prohibit states from mandating it. Also universities. How significant is this going forward in terms of vaccination policies?
It's just a memo at the moment. It doesn't mean courts need to uphold it. But what you are seeing, and we've talked about this for weeks on this program, what next can be done? If incentives aren't working, what can the federal government actually do? And you also have the Department of Veteran Affairs yesterday having their employees making vaccines mandatory. There is a sea change, I believe, across the country as well as in Washington, D.C., and this just puts pressure on the White House and the Biden administration, which was very hesitant to have a vaccine mandate. Potentially that conversation is going to come back in play.
How important is this for President Biden to get the vaccinations up in order to pass his infrastructure plan, frankly, to garner more support from the public at a time when it's very delicate in terms of freedoms and individual freedoms and trying to move the country forward and recover?
It's much easier for the Biden administration if you have things like the Department of Justice coming out and having this memo, because that puts the onus then on also private employers. This gives private employers and states a little bit more backing and encouragement to do these vaccine mandates, potentially introduce vaccine passports and the likes. Getting people out and vaccinated is probably the biggest concern of this administration. And then second to that would be infrastructure. And you hear both of these being talked about when the president goes out into the country and discusses it. Part of the vaccination program is also people need to get vaccinated to want to get back to work. And infrastructure, hopefully, what they want to do is make available more jobs in the country.
Anne-Marie, thank you. Down in Washington, D.C., our Washington correspondent, Anne-Marie Hordern, thank you very much. Let's finish this segment with a bit of optimism around COVID-19 and the trajectory of cases. This came from JP Morgan, Tom. Marko Kolanovic and the team said, quote, with UK cases significantly down over the week, the peak appears to be behind us, which could be a signal for rotation back into value, reflation and reopening themes. The UK being a case study, maybe a forward look on what could develop here in America too, Tom.
John, this drives me absolutely nuts. Ian Bremmer out with an incredibly important video last night, very courageous video. He's getting a piñata this morning from the unvaccinated. John, this is not about cases. Every pro we talk to says lose cases and analyze hospitalizations and deaths, and particularly right now, hospitalizations, which are basically through the roof.
Tom, I'm with you. And vaccinations are going to be the big push in this country. What is interesting, though, to see how the policy effort develops, where the emphasis is right now, Tom, is not to put more restrictions on the vaccinated, is to do things about the unvaccinated.
So what are you seeing in the United Kingdom now? What's the distinction, John Farrow, right now between the United Kingdom and the U.S. on unvaccinated?
Look, just in terms of the relationship, and I think this is the important point for the UK, Tom, away from who's been vaccinated, because a good size proportion of that economy has been now, the proportion of the population. Here's the important point. We already saw the relationship between cases and deaths break down in the UK. And the even better news more recently is that cases are totally rolling over in the last 7 days. And that's what we want to see continue. Coming up on the program, Christopher Owens, Strategic Head of Technical and Macro Strategy. We'll have that conversation with him on the market and on the pandemic with Johns Hopkins, Amish Adalja. We'll do that a little bit later. From New York, all-time highs into Tuesday. Just a bit softer this morning. This is Bloomberg. Live from New York City for our audience worldwide. Let's get a check on a price action for you this morning. Good morning. All-time highs into Tuesday on the S&P 500 and on the NASDAQ. Just a little bit softer this morning. 5-day winning streak. We're about to snap that maybe. We're down about 1/3 on the S&P. We're down 12, 13 points on the NASDAQ right now, down 17, off by a little more than 1/10%. It's the Russell to small caps underperforming. But globally, the underperformance, you know where that's coming from. Switch up the board and get to Hong Kong and China. The Hang Seng down and down hard. We were negative by more than 4% at the close. The CSI 300 down another 3.5%. Over the last 3 days, the CSI 300 is down almost 8 percentage points. Just get your head around that. So the question we need to ask is, what is the transmission mechanism for that pain to bleed out into global markets? Right now, we've got a sentiment issue, clearly. But we also have policy risk and not economic growth risk. To be honest, the team at Bloomberg's done a great job on that. Policy risk is very different to growth risk. Are we about to make that transition away from a story that is all about policy and regulation to something that will deliver a little bit more concern around things like economic growth in China that would spill out to the rest of the world and would spill out to global markets too in a more profound way. So switch up the board and get to the bond market. How much does the China story weigh on yields here? 2s, 10s and 30s. They look like this morning. 125.61 on 10s. Yields in another 3 basis points on 30s. Still sub 2% at 190.66. Down another 3 there. Tom, I think that just frames the conversation that people are having this morning. As they wake up, they look at Chinese equities again and they wonder, why does it matter to me? Why do I care?
Well, it cares to the Secretary of Defense, John, and what's so important here is we see this very real. As John Farrell mentions, folks, we've got the politics folding right in to the interest rate market. I would point out there's a few other things going on as well. The Secretary is speaking in Singapore. The headlines are what you would expect. He says we will not flinch from duties within the South China Sea. But very importantly, one headline, U.S.'s Taiwan work consistent with our one China policy. There is a delicacy, perhaps, of the moment to the north of the South China Sea. Right now, we go to the north to Christopher Rohn, Strategas Head of Technical and Macro Strategy. Thrilled that he could join us this morning. Christopher Rohn, you make an immense distinction on this day of Apple, Alphabet, Microsoft earnings, of the odd weighting of the Dow, the odd weighting of always better weighted Standard & Poor's 500. Explain to us this odd weighting and explain what our listeners and viewers should do.
Yeah, I think it's an important distinction, Tom, this difference between the equally weighted S&P versus the cap-weighted S&P. As many of your listeners know, the 5 largest stocks in the S&P are roughly 30% of the entire weight of the index. When you look at the average issue, the equally weighted S&P, it actually has not made a new high since about May 10th. Now, it's right there. It's not terrible. It's not fatal. But I think under the surface, this has been a much more frustrating market over the last 2 or 3 months than just looking at the index would lead you to believe.
And we look, John, here at the technical analysis of the moment. And on radio, what's so important, John, is at least Verone got the beige suit memo.
Did I not get the memo? Was I meant to get the memo? Should I have worn a beige suit?
John, I mean, you should have had a beige suit.
Does Chris know about the man from Del Monte? Does Chris know about the man from Del Monte?
I don't think so.
Should we tell him about that a little bit later? I'll send you an email about that, Chris, a little bit later, and I'll get your thoughts on it. 3M out with some earnings, guys, seeing full-year EPS at $9.70 to $10.10. Previously saw $9.20 to $9.70, the estimate $9.82. So, look, the outlook for so many of these companies, Chris, is better. The outlook's better. We were talking about synchronized global growth at the start of the year. That didn't pan out. And some of these deep cyclical value trades that people thought would play out, the likes of Japan, the likes of EM, really did not. Can we just blame China for that?
Well, I think you need to remember, when you talk about China in particular, it's almost 35% of the EEM, right? So, much like we talk about the equally weighted S&P with the 5 biggest stocks, that's its own problem when it comes to what the Chinese market here does here. So look away from China. India still acts great. Brazil still acts great. Korea's consolidated in an uptrend. So EM away from China actually still acts pretty well here.
Where does Japan fit into that trade at the moment for you, Chris?
I think what's really notable, and we published on this yesterday, some of these Asian consumer cyclicals, many of which are found in Japan, have started to reassert themselves over the last several weeks. I know that almost sounds crazy just given the headlines out of China. Look away from the headlines, look away from China. Asian cyclicals have actually started to turn back up over the last 2 weeks. So have the European cyclicals. It reminds me of last summer. Asian and European cyclicals led the U.S. cyclicals by about 6 weeks. So there seems to be something brewing there in the recatalyzing of that cyclical trade.
What's the strongest correlation in terms of economic data or other inputs that seems to be driving that shift?
Yeah, well, I think at the margin, we have rates that have gone back to levels that we last saw earlier in the year, or certainly late last year, and we're of the view that low bond yields catalyze cyclicality, not the other way around. High bond yields kill a recovery or crush cyclicality. This is the exact opposite condition. It reminds us a lot of last summer where 60, 70, 80 basis point 10-year yields last July and last August, we think were instrumental in catalyzing or setting the spark for what would become the cyclical rally of the back half of 2020 and early 21. So we see a similar thing here.
Chris, this is exactly where I wanted to go. This idea that low yields actually pushes people into the riskier sectors because on a risk-adjusted basis, you're going to be getting more income from some of those sectors. The flip side is, what if the bond market is sending us a signal? What if it is sending a bearish indication on the overall economy? That would actually have a negative impact on cyclicals. Can we start to worry about that, or is a lot of the move that we're seeing in bond yields purely driven by technicals, purely driven by the Fed dominance, and frankly, a lack of liquidity in the summertime?
I think, and this is a fair debate, and I think if the message from bonds was about something truly sinister on the economic horizon, I think credit conditions would also be weakening materially here, and we haven't seen that. And the other thing we haven't seen, as bond yields have come down over the last 4 months, you have not gotten even a hint of leadership from either the staples or the utilities. So let's get this right here. Staples underperformed when bond yields were rising the first part of the year, and they've underperformed again as bond yields fell the second part of the year. That's just not leadership from these defensive groups.
Christopher Owen, which FANG has the best chart? I mean, I know you don't talk individual stocks, but nobody's watching today because we're wearing beige suits. Which FANG has the best chart?
I think the Microsoft chart has consistently been the best of these FANG names. I'm a little curious here about Apple. Apple has not made new relative highs versus the S&P. It's one of the only FANG charts that has not. The weakest of the FANG charts has been Netflix here. That remains the case. We think Netflix is putting in a big top. So I think at the margin, there actually is some distinction being paid among some of these names. And then, when you look away from the big FANGs, then there's a whole other group of stocks that we call the baby FANGs, right? It's all the aspirational FANG stocks. Those actually have not kept pace with some of the bigger names over the last several months.
Does that go to cash flow? Do your charts in summation to bring it over to fundamentals say profits and quality matter right now?
Well, my colleague Jason Trenner did some really good work yesterday looking at the FANG names, which control about 30% of the cash of the entire S&P. So I think there's a pretty valid argument to make. If you're looking for cash or cash exposure, the FANG names, given that they're 30% of the S&P cash, is not a bad way to do that.
Before we let you go, Chris, let's talk about the financials briefly. Huge focus for so many people. And for the majority, I would say, of guests that come on this show and talk about the cyclical trade, they're overweight, the banks. Can we get it done with yields down here, 125 on 10s, Chris?
You know what I think is interesting? You've seen a bit of a flush in sentiment, and we look at that through the lens of fund flows. If you look at ETF flows into the XLF, the financials ETF, back in March and April, they were super aggressive. Everyone was just a convicted financial bull. We've seen a liquidation in financial flows in the months that have followed. And look, last week, you almost had a very significant outflow from the bank names. You had a surge in the number of stocks making new lows in that group. You put those two factors together, it often means you're in the ballpark or in the zip code of a pretty good tradable bottom in banks. So I think we're close there, John.
Interesting. Chris, good to catch up. Send our best to Jason. It's been way too long. Chris Ferrone there, Strategas Head of Technical and Macro Strategy.
Come on, if he wears a beige suit.
He can he? Is that the entry fee?
That's the entry fee.
You're paying up big time if you're wearing that on there, Tom. We'll move on from that quickly. Earnings coming up a little bit later after the close. Apple, Microsoft, and Alphabet, and then Amazon later in the week. Facebook Wednesday, Tom. That's exciting.
Yeah, seriously. I mean, it's going to be an interesting week of earnings. David Wilson leading our coverage. John, how much did we miss Lisa? The pendulum of bearish indication.
I know. How bearish did that get and how quickly did it get bearish?
Oh, come on. Look.
Record highs, Lisa.
Okay,
Tuesday morning, 5-day winning streak on the S&P. Get happy.
And the question is, why then is a 10-year Treasury yield at 1.2%?
Oh, here we go.
No, in all honesty, if this is an indication on the economic outlook, it is bearish. Period, full stop. If it is not, then what's it an indication of?
Perhaps that's why the Nasdaq's at record highs, because we're at 125.11.
Exactly. All right, man from Del Monte, you can speak.
Thank you.
This is going to go well today, isn't it? Do you know, I heard a rumor a little bit earlier this morning, Tom, that maybe I'll be joining you for the Fed show tomorrow afternoon. Given how this is going this morning, I'm having a rethink. I'm having a rethink, Tom, whether I'm going to join you. Look, I will be joining you. But the three of us driving a coverage of the Federal Reserve decision, Chairman Powell news conference.
Nice, Segui.
And I think for many people, Tom,
just brilliant.
I'm trying to move on quickly.
Please.
For many people, they believe the Fed has the space, the reasons of piling up to take a punt, and wait.
Yeah, nobody cares. All they care about is McKee has a beige suit. So
McKee does actually have a beige suit.
He'll probably not get the last question in the press conference.
He's going to keep dragging you back.
This is going to be the longest market check I've done in quite a while, so let me get straight to it. Just to wrap up this. Your equity market, 5-day winning streak into Tuesday on the S&P 500, all-time highs
60 seconds.
on both the S&P and the NASDAQ. I think I've got to stretch it another 30, Lisa. 124.94 on 10s. Yields come in 4 basis points. The story is about stress in China. The question people have stateside as we wake up this morning in New York and beyond, what does it mean for me? What is the transmission mechanism for that stress to bleed out into risk sentiment more broadly? In the FX market, euro dollar 117.86, we're negative 0.14%. For our audience worldwide, with some tension between Tom Keene and Lisa Abramowicz, I'm Jonathan Ferro. This is Bloomberg.
With the First Word News, I'm Laura Wright. Wall Street is stepping up the pressure on Congress over the infrastructure package. The heads of BlackRock, Blackstone Group and Morgan Stanley are among the CEOs who wrote to congressional leaders urging them to swiftly pass the measure. More than 140 executives signed the letter. Meanwhile, Senate talks suffered a setback. Republicans rejected an offer from Democrats meant to address all outstanding issues. New back-to-the-office mandates from California and New York City. California will require all state employees to prove they're vaccinated or wear a mask in the office and get tested for the coronavirus at least once a week. New York City is doing the same for its municipal workers. Second quarter earnings at United Parcel Service beat expectations. The package shipper is sticking with its capital allocation plan for 2021. That's likely to be a relief for investors who were spooked by FedEx's plans to spend heavily on beefing up capacity. Bitcoin fell after briefly trading above $40,000. Amazon denied that its job posting for a digital currency executive meant that it will start accepting the world's largest cryptocurrency for payments this year. Investors rushing to cover bearish bets had fueled the earlier rally that drove Bitcoin up 17% at one point yesterday. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Laura Wright. This is Bloomberg.
We've lost over 600,000 people, in large part because we didn't have vaccines. But going forward, anyone we lose is due to stupidity. It's due to political failure of our government, of our leaders. If no one else is going to say it, I'm going to say it. I believe that saving those tens of thousands or hundreds of thousands of lives is worth a vaccine mandate.
The outspoken Ian Bremmer there, G0 Media founder, in a video posted online in the past 24 hours. And typically we'd move on, do a market check quickly, Tom, but I don't think we should do that following those comments. That right there gets to the heart of the debate right now in this country and in others too.
And it folds into the Fed meeting tomorrow with our coverage. You'll see that tomorrow in the 2 o'clock-ish vicinity. Right now, off of Dr. Bremmer's comments, Dr. Amish Adalja with Johns Hopkins Center for Health Security. I need to talk to you, Doctor, about the medicine realities within democracy and liberty. Ian Bremmer is talking from a political aspect. You represent the medical aspect. Can you succeed at your medicine amid American democracy and our definition of American liberty?
Yes, I think we can. And I think if you're talking about vaccine mandates, I think it's one thing for the government to mandate it. I think that's very difficult and doesn't usually happen. But we've got so many private organizations, employers, schools, things, transportation companies, where I do think it's justified for mandates, including in my own industry, where we're struggling to get nurses, for example, vaccinated. So I do think that when we institute mandates, you see vaccination rates go up. And I think it illustrates confidence in the vaccines because they are safe and effective. This should be a non-controversial vaccine.
Why are selected nurses afraid to be vaccinated?
It's unclear to me because 96% plus of doctors are vaccinated. But when you go to nurses, it's maybe in some hospitals 50%. And it's likely because they've swallowed misinformation. At least from my personal experience talking to some of these nurses, they've seen something on Facebook, specifically things about fertility, things about this being experimental. And there are some people who believe these ideas about microchips and 5G as well, which is kind of surprising. But it's taken hold. And I think the nursing unions have kind of given them cover and have blocked administrators from, or at least scared off administrators from mandating the vaccines. But more and more of them are going to do it. And I think once we get full FDA approval, I think it's really going to be universal. I think the VA steps yesterday, as well as other organizations, are going to make it the norm that healthcare workers should be vaccinated. And I think that's what it should be, because it's a professional obligation. And I was one of the first people to get vaccinated the minute I could before Christmas.
Amish, some people might say this is an overly narrow or complicated issue at this time of the day, but I feel like this goes to the heart of the issue, and that is the Department of Justice and the memo that they put out yesterday basically saying that even though this vaccine only has emergency authorization, that doesn't necessarily mean that employers and that universities cannot mandate that people get vaccinated. This sort of goes to the heart of the issue of legal immunity for entities that decide to create some sort of vaccination mandates. How important is it for the government to lead on this issue?
It's important that the government give these companies assurance, because they were kind of brought into this by the government's request through Operation Warp Speed. And often during pandemics, when there's a public health emergency, there are indemnifications done for those companies in order to get them to make this vaccine, because they have to do it quickly. They have to do it in an expeditious manner. And there is some uncertainty. And this is what happened during the 1976 swine flu. It happened during 2009 H1N1 pandemic. So I think it is important that the government say that these companies are going to be indemnified, because we're in a basically, this is a government-run program in order to curtail this pandemic. I don't think that there's going to be that many lawsuits, though, because when you look at the safety and efficacy of these vaccines, they're really off the charts when it comes to any vaccines that humans have ever created.
So then why haven't these vaccines gotten full authorization? Why do we still have an asterisk around them at a time when there is such efficacy rates? And why is it that kids under the age of 12 cannot get vaccinated?
So the emergency use authorization was necessary because in order for the FDA to approve a vaccine, they need 6 months of data. That's just sort of what they do. So Pfizer recently crossed that threshold. They've applied now for priority review. It's likely to happen faster than the 6 months that they have during a priority review. But it is something that I think we should do faster and quicker, because we know that this is holding up many places from mandating the vaccines, and it's giving anti-vaccine activists a talking point, calling it experimental, even though emergency use authorizations have been around for a long time, and we used them during H1N1 and during Zika. I think that we're going to see children approved below the age of 12, but it's important that we do the studies, because we're trying to make sure that this is safe and effective, that the risk-benefit ratio favors the vaccine in that age group. Because remember, as you get to those younger age groups, the risk of severe disease falls to very low levels, lower than influenza for a child less than 12 years of age. So we want to get it right. We want to get the dosing right. Hopefully this will be something that we see probably in late fall, early winter.
Dr. Adelj, on a game theory basis, it seems to be that the medical community is drowning in success. It's a miracle that we got the mRNA vaccines done so quickly. Is most of the angst right now because this is all happening so fast, unlike a slower process of previous pandemics?
It may be part of it, because mRNA vaccines do give you that great advantage to make a vaccine candidate within hours or weeks and then move into clinical trials quickly. And I think that the lightning speed of this, which was one of the advantages of mRNA vaccines, has been something that people have exploited to say this happened too quickly. But you imagine if we were still waiting the old way for a new vaccine, how many more hundreds of thousands of people would have died in the United States? How many illnesses would have happened? So I think that the speed of the mRNA vaccines is what makes them the most attractive thing about them. And it's probably going to change the way we face infectious disease outbreaks in the future forever. It's a huge advantage we now have as humans against the viral kingdom.
Doctor, we appreciate your time, and thank you very much for your hard work, sir. Joining us at the end of a very long shift, I'm sure. Dr. Amish Adelj there, Johns Hopkins Center for Health Security Senior Scholar. Here's the shape of the market right now. On the equity market in the United States of America, the S&P 500 -10, down about 0.2% on the S&P. You can focus on COVID cases. You can focus on the stress in a handful of Chinese names, or more broadly, the Chinese equity market at the moment. Or you can take a look at the earnings coming out of America this morning.
Yes, you can.
UPS topping estimates. International sales soaring 30%. GE. EPS better, revenue beating expectations. 3M boosting third quarter outlook after EPS beat. That's beats across the board here, Tom. Going into big tech a little bit later.
Yeah, well, Jim Cramer over at the Death Star features that, as well as John Ferro here in Nirvana. And John, I think you and Cramer are absolutely correct. This is about the earnings. And what's interesting here, John, these are essentially, as a generalization, diversified American non-technology companies. And they're giving a nice oomph as we go to the afternoon in the technology extravaganza.
The earnings are always better than expected. Let's be clear about that. But the earnings are good, Lisa. They're better. The outlook is brighter. The C-suite seems to have some confidence to raise the outlook when last year they couldn't even give us an outlook. There's a difference there, a massive difference.
You're going to call me a bear for this, but I'm going to cite Lori Calvasina. So I'm going to say that she's the bear. And people are looking at the pace of upgrades to earnings per share forecasts, and that actually is starting to slow. And that perhaps is what's underpinning some of the cautious response to some of these beats.
I like Lori. I'm not going to call you a bear.
She's fabulous.
I feel like if I say anything or criticize you, I'm criticizing Lori now. That's a great defense.
Isn't it?
Well done, Lisa.
I have no idea what just happened there.
Lisa
Lori
Abramowicz.
Calvasina is a bear? Is that what we're saying?
Tom Keene. I think
It's
that's
a
what Lisa's trying to
surveillance
say.
No, I was saying this was her argument.
With Jonathan Ferro on radio and TV.
Lori Calvasina
This
is a
is
bear.
Bloomberg.
We're already in that decelerating upward revision pace, and about half the sectors are contributing to that right now.
A slowdown of some degree is not necessarily a terrible thing for the economy as a whole.
If there's not as much slack in the labor market, inflation could still potentially be stubbornly high.
Inflation is likely to run ahead of expectations, but I think it'll settle out at around 3%.
We just got to keep pushing on this recovery long enough to get back to where we should be.
This is Bloomberg Surveillance with Tom Keene, Jonathan Ferro, and Lisa Abramowicz.
Here come the earnings from New York City for our audience worldwide. Good morning, good morning. This is Bloomberg Surveillance, live on TV and radio, alongside Tom Keene and Lisa Abramowicz. I'm Jonathan Ferro. Your equity market just a little bit lower, ahead of a huge amount of results still to come in America, Tom.
Yeah, they're coming in right now. Industrial America's reporting. We'll have more of that through the morning. And then, of course, on to the tech thing. JetBlue just out with some aviation stress there, as we've seen from Southwest and the rest. John, we're going to go to Julian Emmanuel here, and I think he's going to tell us to calm down. How about we calm down and look at the VIX, 18.51. There's this, that, the other thing, John. Which of these this, that, and the other things matters to you?
Record highs on the S&P 500, despite the conversations we seem to be having about record low real yields. This equity market, Tom, on a 5-day winning streak, all-time highs on the S&P, all-time highs on the NASDAQ.
And I was talking to our Martin Schenker today about this. I mean, China's a huge deal. The Secretary of Defense speaking in Singapore moments ago. John, I get that China's a huge deal. I get that the Fed meeting tomorrow with our coverage is a huge deal. But I'm sorry, I've said this for weeks. It's about earnings. They're better.
And the earnings from UPS, GE, 3M, as our team here at Bloomberg say, Tom, the beat goes on. Beats across the board. And Lisa, after the battle a little bit later, the juggernauts, the tech titans, pick a name. I don't care what you call them. They're huge, and the numbers have been stellar over the last 12 months.
And that's the issue, is that numbers are expected to be stellar, and it's going to be the other issues. How much of a concern is the China crackdown on tech? How much are we seeing an increase in digital ad spending? How much do we see an increase in cloud use? Because people have just basically played into the story of the new cyber world. How much do we get confirmation and acceleration going forward? And what does that say for the other sectors as well, John?
There we go. It's nice to get the counterpoint. Lisa, thank you. Your equity market down 6 on the S&P 500.
Looking around
We
corners.
decline, I know, down a little more than 0.1% outside of the equity market into bonds. Lisa, yields lower by 2 or 3 basis points on 10s, 126.28 outside of that. In foreign exchange, just quickly, dollar stronger, euro weaker, euro dollar, Lisa, 117.87. We're negative there, 0.14%.
Yeah, and you talk about those yields, and that is the counterpoint, frankly, to the new record highs that we're seeing time and time again on big stocks in the United States. This idea here of what is this telling us? Can we get any signal from this, or is this just a Federal Reserve with an $8.2 trillion balance sheet, sticking its thumb on this market. Today, we do get some economic data. U.S. durable goods orders for the month of June. There is an expectation for transportation equipment to really bolster these numbers. There could be weakness in other sectors. However, to the degree that there is, it's due to supply chain disruptions, labor shortages, other things that we talk about quite a bit, and don't necessarily mean that there is a bearish tilt to the economy. I just want to note that I was pointing out the positive that could potentially be in that data. Just want to make that note. 10 a.m. we get U.S. July consumer confidence data.
Me too, aspirin.
And this is going to be a compelling read on people's confidence in getting jobs. There continues to be friction here with respect to the participation rate. Highly suppressed relative to where we were pre-pandemic. We are not seeing those jobs come back online. People have speculated that it was due to the enhanced unemployment benefits, that it was due to childcare. What is it, and how much is that actually giving some consumers pause? And then, of course, after the bell, as we were just talking about, we are getting the big tech juggernauts, Apple, Alphabet, and Microsoft, all coming out. The key issue is, yes, the forward projection, but also what their view is on salaries, on supply chain disruptions, labor shortages, things that are endemic to the entire market. If they give some commentary, they could be the leaders, frankly, because others have to compete, John.
After the bell, looking forward to the coverage coming up on Bloomberg TV and radio a little bit later this afternoon. Most people in this building would call me a humble guy. Extremely humble and always willing to listen to really smart people. And here's the first line in a note that I got from Julian Emanuel. His guest notes, just the first line, Tom. John is right. So let's start there. Julian Emanuel, BTIG Chief Equity and Derivatives Strategist. Julian, let's start there. Why is John right?
Because, John, you've been saying this for quite some time now, that, just asking the question, why can't you just be a passive S&P 500 index investor in a world where, if you look at 2021, active management, as we heard from guests earlier in the show, has been giving you headaches for the most part, at least the last several months. The answer is to us, because if you're just simply a passive investor, you sort of are open to this range of emotions that, frankly, if you look at the course of investing over the last 12 or 13 years, certainly since the bottom of the financial crisis, you have to be in the psychological mode to where you're buying the dips. It's very difficult to say, I'm going to commit cash in March of last year. Very difficult to say, I'm going to commit cash in March of 2009, the times when you really wanted to do it. So either having something that causes you to outperform to the upside or outperform to the downside gives you that psychological edge to do what we think you're going to need to do and want to do for a number of years to come.
I should be very careful here. I'm not making a trade recommendation. I want to be clear about that. Julian, you're the man who's got to do that for me. Work through it now then with me. Got all these issues on the horizon at the moment. How COVID cases play out. Do they translate into higher deaths, increased hospitalizations, maybe more restrictions on the economy that just turn down the dial on mobility? Then you've got the China factor as well. It's just worry after worry. Julian, just piling up, as always, and this market keeps climbing that wall of worry to all-time highs. How do you navigate those issues?
So, again, look, the price action tells all right now. And the price action, even though it is telling all, is telling a somewhat contradictory message that at the headline, the S&P 500 continues to rise, very much propelled by the NASDAQ. Within the NASDAQ, very much propelled by a number of stocks, all of whom we're going to hear about earnings over the next 2 to 3 days. But there is starting to be a diminution amongst the rest of the troops. Breath has turned a little bit soft. That can continue. But frankly, from our point of view, when you look at the bigger picture, when you've seen the kind of economic strength that we have seen build over the course of the year, whether this is the peak of growth or not, the implication is stocks are likely moving higher over a multi-year period from here.
Julian, you look at the dynamics that are out there, the derivatives and all that. Let's look at the one derivative, which is cash on a balance sheet. Today, this afternoon, the three big ones, Microsoft, Apple, the other one, Google, 135 plus 125 plus 204 gazillion dollars. These guys could top trick $500 billion cash in their report this afternoon. What's the social good of all that money should they return it to shareholders?
Well, look, they are, for the most part, slowly through buybacks, The signaling of sort of a special dividend or something like that from companies like that that are poised for continuous growth, secular growers, has tended over time not to be good. You can argue about the social good, but I think, frankly, what you're going to hear from them is, ways of getting stakeholders more included in the debate rather than just shareholders. So talking about wages, talking about employment programs in an economy that, frankly, confounds people because of the lack of the return of the participation rate in a market where there are jobs incredibly plentiful.
Julian, what signaling power does the bond market have for equities at this point?
Lisa, that is the, $20 trillion question, the size of the U.S. economy. From our point of view, it's really rather limited. Look, obviously, we know that the Fed has, as you said earlier, put their thumb on the bond market. But also, when you think about it, all the extraordinary monetary and fiscal stimulus has come together to chase asset prices higher across the entire range, whether it's commodities earlier in the year, obviously stocks, goods prices, i.e. inflation, or the bond market. To us, it's all the wall of money. And the question is policy or perception likely to change? And our view is that you could get to a point where if the labor market does sort of remove the logjam that we have come the fall, which is the Fed's expectation, in an environment where the Fed is not likely to advance the taper conversation materially this week, you could see yields start to rise in the long end.
Julian, just quickly, are you still at 4,000 year end on the S&P?
We are, and here's the reasoning, John. Again, as I said earlier, this kind of economic strength, while it bodes very, very well on a multi-year period, doesn't necessarily mean that corrections don't happen. We've gone quite some time without a correction, and frankly, we're concerned about some of those internals, the lack of breadth. And we think, actually, if you look at it, this could be a week where there's a potential for a surprise in terms of reaction from the large cap tech stocks, which have been doing all the heavy lifting.
Interesting. They start reporting in earnest a little bit later after the close. Julian, thank you, sir. Julian Emmanuel, BCIG Chief Equity and Derivative Strategist. Julian, love catching up with you, sir, as always. 4,000 year end on the S&P. Lisa, I know, we'll get there. Don't worry.
We have to address this.
4,300 is the median estimate on the S&P 500. I can stretch this one, Lisa. This is called the filibuster. Just before I finish, David Costin of Goldman Sachs out going into last weekend. I think we're at 180 days now without a 5% drawdown. So drum roll. Could this be it, Lisa? The tech earnings coming up a little bit later. I'll put it on a plate for you.
Thank you.
Go on.
Well, the filibuster is that if anyone wants to get on the show, just send us an email that says, John is right. John was right. John knows all. And then you will come on this show and we will lead the segment with that, John. So you can keep filibustering now.
Let me tell you. If I had to call this market the way Julian had to call this market, I would be absolutely terrible at it. Better off sitting here and asking the questions, Lisa. The S&P down 5. We're negative a little more than 1/10%. Yields come in 2 or 3 basis points at 126.28 on 10s. From New York City, what a lineup we've got for you. Big tech reporting after the close a little bit later. We have Apple, we have Microsoft, we have Alphabet too. On radio, on TV. This is Bloomberg.
With the First Word News, I'm Laura Wright. The two Koreas have agreed to rebuild ties. That could lead to a possible opening for President Biden to push for a breakthrough in stalled nuclear talks. North Korea's Kim Jong-un and South Korea's Moon Jae-in have been exchanging letters. They have reopened hotlines that had been silent for a year when Kim's regime symbolically blew up a liaison office funded by South Korea. In Tokyo, a grim new record. The number of coronavirus cases in the Japanese capital hit a record today, more than 2,800. The surge comes as tens of thousands of visitors are in Tokyo for the Summer Olympics. Only about a quarter of Japan's population is fully vaccinated. In the UK, scientists are welcoming a sustained fall in coronavirus cases. They just don't know what's behind it. One day last week, there were almost 40,000 new cases. Yesterday, there were fewer than 25,000. That's a boost for Prime Minister Boris Johnson. He's been criticised for lifting restrictions early last week. President Biden says the American combat mission in Iraq will be over by the end of the year. Still, the US is expected to keep a military presence on the ground. The president met with Iraq's Prime Minister Mustafa al-Kadhimi yesterday. American troops in Iraq have been gradually transitioning into an advisory and training role. Second quarter earnings at United Parcel Service beat expectations. The package shipper is sticking with its capital allocation plan for 2021. That's likely to be a relief for investors who were spooked by FedEx's plans to spend heavily on beefing up capacity. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Laura Wright. This is Bloomberg.
We will not flinch when our interests are threatened, yet we do not seek confrontation. So let me be clear. As Secretary, I am committed to pursuing a constructive, stable relationship with China.
That was the US Secretary of Defense Lloyd Austin speaking earlier this morning in Singapore. From New York City, for our audience worldwide this morning, good morning. Alongside Tom Keene and Lisa Abramowicz, I'm Jonathan Ferro. As we count you down to the open about 2 hours, 12 minutes away, your equity market on a 5-day winning streak on the S&P 500. Down just 5 points now. The mood music improves. Equities off the lows, down just 0.1%. Yields off the lows, down 2 or 3 basis points to 126.11. And the earnings beats are piling up, Tom. UBS, GE, 3M, take your pick. They look decent.
Pretty much expected in a boom economy. We'll have to look forward to the view to Q4 and particularly those conference calls this afternoon. Bloomberg will give you complete coverage starting, call it 4 p.m. I believe the close will show up to do that, and the conference calls will be fascinating. Right now, let's tie in Lisa Abramowicz's observation on labor participation, Julian Emanuel's enthusiasm for the market, waiting for a jobs recovery, with our Jack Fitzpatrick on Washington politics. The chart is labor participation of the core audience 25 to 54. For those of you on radio, there is a nirvana of 2006. Things changed. It finally got better, and the pandemic absolutely crushed labor participation. There's been a somewhat recovery so far. Jack Fitzpatrick politics is all about jobs. Fold in this infrastructure ballet with the need for jobs.
Well, the infrastructure bill is being cast broadly, really by both parties, as an attempt to create jobs. There are going to be a number of provisions. There are a lot of talks now on how they set the wages, the focus on American jobs, American steel, et cetera. A lot of the other conversation about labor force participation in Washington, as you know, has come down to the debate over the unemployment insurance boost that the president lately has essentially sidestepped and said, hey, that's going to end in September either way, regardless of the criticisms from Republicans. So really, the Biden administration and Democrats are very much all in on a jobs message in their biggest legislation that they're pushing. But obviously, there is a real partisan battle as it pertains to the labor force participation rather than the creation of jobs.
Well, what's so important here, it's a Bloomberg focus. I mean, Apple's going to come out with earnings today. There's going to be a huge uproar about cash flow. Nobody in your world cares about tax cash flow, do they?
No, that is not really the topic of conversation. We've got a few things on our plate in Washington. One is infrastructure. The next is essentially human resources, everything the Democrats have talked about, including taxes for the next big bill.
Yeah.
And then when you look at that chart, really, I think the number one debate in Washington has been the unemployment insurance, but that's essentially fizzled out with that set to expire.
I mean, Lisa, you'd absolutely nailed this earlier, that I'm sorry, there's a huge discussion here about a lack of a labor economy within a boom cash flow driven market.
Yeah, which really raises a question about the dominance of some of the largest companies, and was one of the reasons why I thought that yesterday, the fact that Aon canceled its $30 billion planned takeover of Willis Towers Watson. It was this combination of insurance brokers. This idea that the antitrust department torpedoed it was significant. Jack, do you get the sense that there is going to be more of a crackdown on some of the big tech juggernauts, as Tom rightly mentions, that the cash flow that we're seeing doesn't necessarily affect those other metrics that are key for the overall economy?
There is a broad concern about big tech companies. So, there've been markups of antitrust bills. Sometimes it is a cross-cutting political issue with support in both parties. Really, right now, if you're watching for some significant action by Congress, the question is, how does something become law? And there's not exactly a glide path in Congress for really significant changes in the area of big tech regulation. It's something that is building in Washington, and you could probably argue there is some more bipartisan interest in it than there had been in previous years. But it's not exactly the top of the ledger for legislation in Washington right now.
Jack, this is a delicate question, but I'm wondering whether China's crackdown on the big tech companies there have any effect on the U.S.'s willingness or not to take similar actions, albeit perhaps not as extreme, in their country.
That would be a tough one to answer, to be honest, to try to play out how that would extend to the U.S. policy. A lot of the conversation in Washington really is just driven by what members see in polls, at least when it comes to Congress. If there are more minor things that the executive branch already has the authority to do, that's a different conversation. To be honest, I'm not exactly sure how to answer that one. I think the big tech conversation right now in Washington is politically driven by a frustration and a skepticism with big companies and on the tech side. I'm not sure if it's necessarily driven here by China's approach or our reaction to China's approach.
Jack, thank you, sir. Good to hear from you down in Washington. Bloomberg government reporter Jack Fitzpatrick there on the politics of the moment. Let's take the politics and bring you a market call. This from Morgan Stanley from over the weekend. Improving prospects for the passage of an infrastructure package by the U.S. Congress would put pressure on yields, upward pressure. Tom, they're looking for 180 on a 10-year still. They're sticking with that call year end. Right now, 126.
A lot of people are going to put out a whole set of calls. That's what makes us go, John. And I would suggest after today, really beginning at 5 p.m. this afternoon, you may see a reset. How many people, John, are going to lift SPX if they deliver?
What, do you remember the numbers this time last year? For a quarter that was really, really tough in Q2 of 2020, and they knocked it out of the park.
Yeah.
That was one of the most phenomenal earnings seasons I've ever seen, Tom.
John, let's talk about this. I think it's important. I like this idea that people are gauging percentage moves off 2 years ago. I sort of like that convention.
The 2019 comps.
Yeah.
I think that makes a lot of sense, though, doesn't it, Tom?
I agree.
For the tech players, though, they've proven they can make money if we're shut down. They can make money if we're reopening. Yeah. And for the likes of Facebook, who deliver earnings on Wednesday, we had earnings from Snap and Twitter last week. And Lisa, that really set the stage for better ad revenue for some of these companies. And Alphabet's been part of that play. Google's been part of that play. Let's be clear about that. We talk about these secular growers, all of that good stuff. There's a real cyclical story at play here for some of these big tech heavyweights too.
The story makes perfect sense. I buy it. The question is, what's priced in, right? Because if you talk to anyone, they say that's priced in. Earnings momentum for the next 3 years, priced in. And it's very hard to gauge what we're even measuring against when a number of the conventional metrics have kind of been thrown out.
Alphabet up 0.6% in the pre-market. Is the price action more broadly for you? We're down 6 on the S&P 500. We're negative a little more than 0.1%.
Yes, just went green.
Yields off by 3 basis points at 126. And the NASDAQ 100 just turned positive. There you go, Tom. I'm getting there. Up 6 with positive 0.04%. There's a lift. The mood music improves as this session grows older. From New York,
that's my entry.
This is Bloomberg. Live from New York City for our audience worldwide on TV and radio. Good Tuesday morning to you. Here's the Tuesday morning price action. The mood music improving as this session grows older. Your equity market turning positive on the Nasdaq. We're up 6 on the Nasdaq 100, positive 0.04%. All-time highs into Tuesday. We could add some weight to it, maybe. On the S&P 500, we're down just 6 points now, negative 0.13%. The earnings, part of the story this morning, the likes of 3M, GE, Caterpillar still to come. So far, so good. Beats across the board. That's given us just a little bit of a lift elsewhere as well. That's the equity market. We've got to work through a range of issues. After the close, we'll hear from the likes of Microsoft. We'll hear from Apple. We'll hear from Alphabet. Those three names alone, 25%, almost a quarter of the Nasdaq 100. Just one of the issues for after the bell a little bit later. Switch up the board. Here's another one. 2s, 10s, and 30s. The view from Morgan Stanley. If we get that passage of an infrastructure package, we can get yields back towards 180 by year end. Maybe. Here's your 10-year right now, 126.28.
That's a long ways away.
Yields in by 2 or 3 basis points. It feels like a lifetime away, Tom. We've got, 4 or 5 months to get it done.
Exactly.
Your bond market on 30s, 191.44. Yields in there by 2 or 3 basis points. Just another one of the issues we've got to think about this morning. Here's the final one. China. Switch up the board and get to this. This is where I want to sit for a moment, Tom. Let's work through it together. Dollar China, dollar yuan, back to 650. Just a little bit of weakness this morning on the Chinese currency side of things. And let's just sit and play with that, Tom, because if you're going to start to worry about a regulatory issue becoming an economic growth one and a transmission mechanism for this to bleed out through risk assets, you want to look away from Chinese equities just a little bit. That's where the headlines are, Tom. You've got to start looking at what happens with the Chinese currency, and it is such a small move so far after a monster move of Chinese currency strength over the last 1 year. But if that broader de-risking starts to emerge, you'd expect to see it in the FX channel a little bit more, Tom.
I'm in the camp, John, and this is from personal experience in Beijing, that it's really away from the equity markets and it's much more about the financial relationships of private enterprise, the SOEs, and also, of course, the banks, both the real banks and the illegitimate banks in China. That stew of issues is way more important than equities.
And we're not there yet in foreign exchange, let's be clear. 650.55 on dollar China overnight. That's the story more broadly cross-asset. Ton of earnings to get through with those numbers. Here's the man himself. Hello, Romain.
Yeah, good morning, John. A lot of earnings on the U.S. side here. Of course, we did get those UPS earnings. It was an interesting move here. We saw a 14% adjusted operating profit of sales. That's a bump higher than what the street was looking for here. They were looking for about 13.2%. The turnaround for Carol Tomé, that appears to be going as planned here, but investors want to see maybe a little bit more momentum. You're seeing the shares down about 2.5%. With GE, it's a totally different story here. Investors do seem to be all in on Larry Culp and the turnaround there. Of course, he is approaching his 3-year anniversary here, and he has refocused this company as an industrial business. And I should point out the cash flow from that industrial business right now is going to come in a lot higher than what the street was expecting, about 20% higher. That's the forecast, going to be at the top end of a range of around $5 billion. A lot of that because of the commercial aerospace business that Culp has really centered this company around. Of course, we also got 3M results as well as Tesla last night. That also impressed, the big milestone for that company. It actually surpassed $1 billion in net income on a quarterly basis. First time it's done that. Now, of course, we flip with the board and look to after the bell tonight. It's going to be, of course, the biggest companies in the world out there. Apple and Microsoft, the two largest companies out there by market cap, going to be reporting. For Apple, it's going to be all about that product pipeline, specifically what happens for its fiscal Q4 and whether that new iPhone 13 comes in that quarter or they push it back to fiscal 2022 fiscal Q1. I'm going to get it out, but there it is. But the street is looking right now for about 90 million phones produced in that quarter. Whether that slides to Q1 or Q4, that'll be a big determinant of how the shares react. Microsoft, this is all a margin story really here. This company has really knocked it out of the park with regards to its cloud computing business. Where remember, there was a huge accounting change in the previous quarters that allowed for that gross margin expansion. That's not going to be there when they report for this quarter. It'll be interesting to see how the street reacts to that. And then, of course, keep an eye here on Starbucks here. This is also going to report after the bell. And this was a company that really did well with regards to keeping its customers tethered to the business, despite the fact that most of its stores were closed. The digitization, the off-premises sales, they did well. But now the costs are going up up high. We know their labor costs are going up. And of course, we saw the price of coffee beans go up about 25% in the quarter alone, Q2, and they've gone up about 39% since the quarter ended. So it'd be interesting to keep an eye on their forecasts, guys.
Romaine, thank you. We'll look for that in the close this afternoon with all sorts of good information from those conference calls as well. Right now for Global Wall Street, Ian Lingen joins us with BMO Capital Markets, head of U.S. rate strategies, a hyper-dense morning note, always read worldwide. Ian, I'm going to go right to a single sentence you have, which suggests the demand for bills, notes, and bonds. And that is the backstop of demand you see out there. Define that backstop.
Well, Tom, I certainly think that if we look at the primary takedown of Treasury supply via the auctions, we continue to see a willingness to underwrite Treasuries, whether it's from domestic accounts, primarily banks and investment firms, or overseas, central banks in particular. These auctions continue to see strong sponsorship, and that at a minimum suggests that there will continue to be a backstop of demand that isn't really going away anytime soon. It's less about whether or not there's a willingness to absorb supply and more a function of what levels will we see these takedowns. And with 10-year yields at 125, it's very difficult to argue it's not a strong market for U.S. debt.
Ian, what needs to go right, or wrong for that matter, to get 10-year yields to 180? From 126, 180 by year end. That was a call from Morgan Stanley. What would need to happen for that to happen, in your mind at least?
Well, in my mind, I don't think that it is as simple as passing, for example, the infrastructure bill, because that will be staged in over time and not actually lead to the type of wage inflation that the market would need to see for inflation in and of itself to become self-fulfilling. The one key aspect of this recovery that has been missing thus far has been wage inflation. If we see the labor market participation rate continue to be low, and there are pockets of labor scarcity over the course of the next few months, we might see spikes in wages, which would then get the market excited about the idea that inflation could be self-fulfilling. But I'll argue even that would fall into the Fed's characterization as transitory. We really are coming out of a massive shift in the real economy, and there's a lot of different moving pieces yet to be resettled where they will be going forward.
Ian, this is really important. Tom and Lisa were discussing it a little bit earlier. The failure to see real continued improvement in things like the employment to population ratio, the participation rate in America. If we don't get that improvement, if we don't get back to where we were, say, how much would that complicate the outlook for this Federal Reserve, which, to be fair, is pinning its forecast on the idea that we do fully recover on those aspects?
Well, I think it will very much complicate the Fed's path for rates going forward, because on the one hand, they've acknowledged that inflation has come in stronger than even they were expecting. But on the other hand, under their new framework, the Fed needs to remain accommodative for, frankly, the foreseeable future until the unemployment rate gets to the lows that we've already seen. And within that, we are assuming, and so is the Fed, that the labor market participation rate slowly starts to increase. If you don't see labor market participation increase, then you'll continue to have this surplus supply of workers that if there isn't enough incentive for them to slowly come back into the market, will really leave the Fed at a loss in their new framework.
At this point, given the Fed's intervention, is the bond market accurately reflecting the fundamentals?
I think at this moment, the bond market is reflecting the realities of the Delta variant, not so much that it's going to lead to increased lockdowns or the revival of restrictions in the US, but rather it's a reminder that these variants, the potential for these variants, are going to be with the real economy for a while. And so while we might have brought into the beginning of this year the assumption that after Labor Day we'd be in the new normal, the reality is we're going to continue as an economy and globally and domestically to deal with the pandemic. So it's extended the timeline out of the pandemic. I think that's why rates are where they are at this moment.
Just real quick, do you expect negative real yields to go even more negative as inflation expectations continue to pick up?
As long as nominals are contained, inflation is drifting its direction, and the Fed doesn't hasten the departure from QE, there's no reason to expect that we couldn't see real yields continue to drift lower. I think 10-year or 10-year tips yields at negative 125, which would be another 15 plus basis points from here, is something that the market needs to have on the radar as a risk.
Ian, thank you. Good to get your view on this market, that's for sure. Ian Lingham there, BMO Capital Markets Head of US Rate Strategy. Just want to turn to some news from AP. Four-time gold medal winner from the Rio Olympics, Simone Biles, out of the team finals with an apparent injury. Tom, this coming from the AP about 10-15 minutes ago. Simone Biles out of the team finals with an apparent injury.
The New York Times with a wonderful feed here, minute by minute and tick by tick of this close competition of China and Russia and the United States. And what they discern here is that she was working on some of her weaker things when she really failed. I mean, in one of the warm-ups, there's no other way to put it.
And to be clear here, Lisa, one of the few, in fact, maybe the only athlete I can actually name at these Olympic Games this year.
I'm right there with you. She has won the most gold medals. She is a Spitfire, 4'8". Just her story is tremendous. John, I've actually watched biopics about her because her story is so interesting, and how the people who are fostering her just saw her flipping off of things and saying, okay, this girl needs to be in gymnastics. She's got a lot of energy and a lot of skill, and she certainly does. And unfortunately, she's out of the running with this year.
A phenomenal woman, phenomenal athlete. Simone Biles is out of the Women's Olympics gymnastics team final in Tokyo. Some reports suggesting that to be true in the last 10 or 15 minutes. Coming up, Congressman Kevin Grady, the ranking chair of the House Ways and Means Committee. That conversation up a little bit later this morning. Your S&P 500 down 4, call it 5. We're negative 0.1% on the S&P. Yields in a couple of basis points to 126.28 on 10s, and a ton of earnings after the close today. Full coverage on TV and radio. Apple, Alphabet, and Microsoft on deck after the close. From New York, this is Bloomberg.
With the First Word News, I'm Laura Wright. Breaking news from the Summer Olympics in Tokyo. As John and Lisa were just saying, according to the Associated Press, US gymnastics star Simone Biles has withdrawn from the team event because of an injury. No word on what the injury is. The New York Times says Biles withdrew after faltering on her first apparatus of the final. On Capitol Hill, those talks to come up with a bipartisan infrastructure spending bill have run into a number of obstacles. Senate negotiators ended the day still trying to resolve differences over transit funding, water projects, and how much unspent COVID money can be used to pay for infrastructure. Lawmakers insist an agreement is still possible. New back-to-the-office mandates from California and New York City. California will require all state employees to prove they're vaccinated or wear a mask in the office and get tested for the coronavirus at least once a week. New York City is doing the same for its municipal workers. Shares of General Electric are rising. Growth in GE's jet engine division prompted the company to raise its cash outlook. That's led to optimism that improving air travel will give a boost to CEO Larry Culp's turnaround efforts. The petrochemicals division at ExxonMobil is supercharging its financial turnaround. The often overlooked segment of the oil giant's business will probably post a record high earnings this week. That's because of the surging prices for plastics. Demand for products such as packaging and materials for flooring held up during the pandemic, and they've risen during the reopenings. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Laura Wright. This is Bloomberg.
We need to be thinking about what is that trend rate of growth after sort of the deceleration. And the deceleration that we're seeing, while we may have expected it, it is coming a little more quickly because of the rise of this Delta variant. We will see ultimately some reacceleration in growth.
Great to catch up with Gene Tenuzzo there, Columbia Threadneedle Global Head of Fixed Income from New York City this morning. Good morning. Alongside Tom Keene and Lisa Abramowicz, I'm Jonathan Ferro. Tuesday morning, all-time highs going into Tuesday on the S&P. A record on the NASDAQ. We're down just 6 on the S&P. We're negative 0.13%. The NASDAQ 100 just about positive now on the session. The mood music improving as this session grows just a little bit older. Yields come off the lows. Still at 125.94, Tom. Yields in 3 basis points on a 10-year, and crude unchanged at $71 and about 92 cents.
Waiting for the VIX to come in as well, near a high 19 into 18.36, up 0.78 points, and you got to believe that's going to grind in as we get towards the market open. David Wilson is good enough to know that a sample size is 30. Anything under 30 data points, you go, maybe. He goes this morning where few tread. A sample size less than 30. What do you have?
Well, okay, I've got a sample size of 5, but it's not just me. It's Carter Worth over at Cornerstone Macro.
Yeah.
He had a Twitter post out yesterday looking at weeks when you've had sort of the big 5 of technology all reporting, as is the case this week, considering we've got Apple and Microsoft and Google's owner Alphabet due to put out results today, Facebook tomorrow, Amazon.com on Thursday. So that's happened 5 times since 2015, and every time you've seen the S&P 500 either fall or not rise. I mean, last time was in April, and it was up 0.02%. That's about as little change as you can get. You go back to October, 5.8% decline in the week that all those companies reported. So it's not like the fact that we got all these numbers coming out is necessarily a plus for stocks.
And folks, the profanity from our headline team when they're putting this stuff out, I mean, they're moving at light speed. And I've actually had the headphones on listening to our headline team get this done. And David Wilson's actually led all this coverage. They come out with earnings. We all see that. And then there's Top Live, and then there's the conference calls. Are the conference calls important to you?
They are, because they kind of fill in some blanks in a lot of cases in terms of how companies are looking at their business, what they're anticipating going forward. That's really the key, because, you can look at the basic numbers and draw conclusions. But at the same time, I mean, like 7 out of 8 companies in the S&P 500 are beating analyst average earnings estimate, and a similar number are coming out ahead on sales. So that doesn't necessarily tell you all that much anymore. So you really have to kind of get a sense of, how does the business look going forward, and what do companies focus on? What do they talk about? How are they dealing with higher costs, for example? That's the case for a lot of businesses at this point, the inflation sort of situation and how they're dealing with it.
Dave, we've gotten used to this. It's the same story over and over again. These companies report blowout earnings, and the shares barely move or even fall, and people say it was all priced in. How do we even begin to know what we are pricing in ahead of these earnings?
Well, that's the challenge as much as anything. You do have to bear in mind, though, the S&P 500 has been setting records lately, and we've seen earnings estimates for the second quarter going up even before companies come out with their results. Then they beat projections, and it's kind of like, okay, this is what we're anticipating. And we are getting some positives, though, out of the results. I was looking at a report from Lori Calvasina at RBC Capital Markets that if you look at the average S&P 500 company that beat earnings estimates, it's been up like 0.3%. But you look back at the last 3 or 4 quarters, you didn't even get that. So, there is a sort of a positive spin, you might say, coming out of these results.
All right, Dave, I'm not wearing a tan suit, but I have been hanging out with Tom Keene a lot, so I do want to rip up the script a little bit and ask you about the contagion factor from the sell-off in Chinese equities, the question of whether there could be some sort of transmission mechanism. What are you hearing from the analysts that I know you speak to all day long in terms of what that transmission mechanism could be, whether there could be contagion or whether this truly is an isolated event that is really providing perhaps an excuse for on the margin cashing in on positions?
Well, more the latter, because so much of it is tied into the regulatory situation in China. You can draw parallels, I suppose, to some extent to what's going on in the U.S. With the look at the big tech companies and whether they should be as big as they are in terms of antitrust situations. That said, I mean, talk is one thing, action is another. We're certainly seeing action in China, whether it's, Didi Global, the ride-hailing service, or it's the online tutoring companies, or even food delivery. There's a company called Meituan that's being affected by changes in regulations there. So talk is one thing, action is another. We're seeing a whole lot more action in China.
We'll see the action this afternoon on earnings. David Wilson, thank you so much. Greatly appreciate that. John Ferro, we've got a setup of 3 economic datas, durable goods, into housing, into the conference board as well. You wonder how that folds over into the real yield analysis.
Well, let's frame the world right now according to Goldman Sachs and then get the other side of things from JP Morgan on market strategy strategy. Tom, we talked so much about the Goldman call yesterday, and for our audience worldwide on radio and TV, if you missed that, here was the quote. In the near term, a complete service sector recovery will likely require fully overcoming virus fears and returning to office work patterns. Both now appear likely to take longer than we anticipated. What does that mean for your market call? Well, JP Morgan pushing back a little bit against that. Marko Kolanovic and the team, Tom, going on to say, with UK cases significantly down over the last week, the peak appears to be behind us, which could be a signal for the rotation back into value, reflation and reopening themes.
Wow.
For many people looking to the UK, it's the UK case study that gives them a forward look about what they think may or may not develop here in America, Tom, and what that means for your market call.
It is just a stew. I don't know what else to say about it, John. I have no conviction either way other than look at the data each day. And frankly, that's what Chairman Powell's doing. They are, I mentioned this, I believe it was yesterday, they are ex post like I've never seen.
So they've got to wait until when?
Wait and wait.
Well after September.
You know, to be honest, and I defer to the experts, they're going to wait 3 meetings from the identification of the data point.
This is why I don't get the
I don't
Jackson
believe
Hole
I've ever
fuss.
said that.
I don't get the Jackson Hole
I
fuss
agree.
because
I
you've got
agree.
to wait, Lisa, for the supply side of the economy to respond before you make a move on anything. And most people, most economists suggesting September is just the beginning of maybe the time when we'll experience that.
What's interesting to me is that the market participants are trying to look past the Fed and figure out what the pressures will be in terms of getting them to move more quickly than they're currently forecasting. And if you take a look at the Citigroup Economic Surprise Index for the United States, you can see that it's nearly the most negative since last June. If you look at that, this idea that perhaps people have been overly optimistic more frequently than they have over the past a few months, it shows caution, right? And if it's caution, then perhaps the Fed is right to be hesitant. And I think that this is what people are looking at, not necessarily what the Fed will do, but what they'll be forced to do down the line based on where the real economy is going, John.
126 on 10s right now, 126.11. Yields coming in 3 basis points. Just to give you a bigger picture of what's happening with the markets right now, Tom. Equity futures in 8. We're down 0.2%.
John, major debate at Jackson Hole's Huckleberry pancakes or plain pancakes at the Pioneer Grill.
That's the debate. That's it.
That's a debate.
Nothing else matters for you.
Nothing else matters.
Why am I surprised? In fact, I am surprised. Is there a drink involved? What is the beverage of choice with that particular breakfast?
No, well, they serve Tang. I mean, it's a Pioneer Grill. They're going to get a Tang Mimosa.
Tang Mimosa. Crushing it,
you
Tom.
know.
From New York, on radio, on TV, this is Bloomberg.
Under the surface, this has been a much more frustrating market over the last 2 or 3 months.
We're already in that decelerating upward revision pace, and about half the sectors are contributing to that right now.
You have to do anything you can to try to get money out to earn a positive real yield. I mean, that's really the point.
We just got to keep pushing on this recovery long enough to get back to where we should be.
This kind of economic strength, while it bodes very, very well, doesn't necessarily mean that corrections don't happen.
This is Bloomberg Surveillance with Tom Keene, Jonathan Ferro, and Lisa Abramowicz.
Good morning, everyone. Jonathan Ferro, Lisa Abramowicz, and Tom Keene. Simulcast, Bloomberg Radio, Bloomberg Television, news flow, extraordinary earnings this afternoon. The Fed tomorrow. John, what are you focused on?
All-time highs in the equity market. Keep going back to it, Tom. 5-day winning streak on the S&P 500. Record high on the S&P, record high on the NASDAQ, and about a quarter of the NASDAQ 100 reporting after the close in just a grand total of 3 names, Tom. Apple, Alphabet, Microsoft.
The real yield doing a little better than the agony of 2 or 3 hours ago. Let's skip that right now. John, you and I don't hearken back to what people said a long time ago. We don't play the, oh, he was right, oh, he was wrong game. Can we go back to the brave, long ago and pandemic-y far away that said 3,700?
Let's go to the first week of November. I think the first week of November is really important.
Okay.
That's when the headlines around the efficacy of these vaccines first came out. The S&P 500 that morning at 3,300. That was around the time that you get the banks on Wall Street getting together, getting around the table and thinking about the year ahead, the outlook, your year-end 2021 forecast. I remember when Deutsche Bank came out at 39.50, when the likes of Goldman Sachs, we thought David Kostin was a crazy man at 4,400 on the S&P 500, Tom. We're at 4,400 right now coming into Tuesday.
Well, we'll talk about that here in a moment. And, John, it does go back to the reaffirmation of earnings. John, would you suggest that Apple, Microsoft, Alphabet, Google, the rest of them really matter to the entire Standard & Poor's 500?
Absolutely, just for the weightings alone. If you mean for sentiment, I think that too. Right. For this equity market. But more broadly, the tone has been set by what happens in the bond market. Where you want to be, growth or maybe the cyclical seems to be shaped for some people, not everyone, but for some people almost exclusively by what happens on a 10-year yield. And right now, we're at 125.94.
Lisa, we're looking at Washington almost with another stimulus in an infrastructure. And as you mentioned earlier, that wonderful idea on labor participation, it is two Americas.
It is two Americas, and that infrastructure bill, perhaps it is sort of eking its way through Washington, but not fast enough for some people. I want to just point out, Tom, you said that you were in cash. So was everybody else. There was data just coming out from the Federal Reserve showing that there are $17 trillion, you were pointing to this earlier, Tom, of deposits. This perhaps supporting all asset prices. What indication are we actually getting then at this point from markets?
Last number of days, overnight repos, what I call the trust market, that very, very short-term paper, up a little bit to go through $1 trillion. There would be a huge deal. John, let me do the real yields here across the data. The 10-year real yield, negative 1.14. We've improved a little bit lesser negative, but that residual, that inflation-adjusted yield, truly a record low.
I'll get to the nominal, Tom. 125.78 on 10s. Here's the picture of the markets for you. Yields in 3 basis points on a 10-year this morning. Your equity market off the lows, down just 6 on the S&P 500, negative 0.14%. Euro dollar unchanged, 118. Crude basically unchanged, Tom, just south of 72 at $71 and about 90 cents.
We talk to experts, and we particularly talk to experts of a quantitative bent who have incredibly detailed strategy, and that would be Bikram Chadha at Deutsche Bank, their chief global strategist, an informed pronote. We'll have him translated to the English right now, and thrilled he could join us this morning. How do you interpret or use the earnings from the big tech companies? What does it mean to you?
So there's several questions here. I mean, they're obviously, number one, a very large part of the market. And we've been living in a world now, this is the 5th quarter, where the bottom-up consensus has gotten beat by actual delivered earnings by the tune of 15 to 20 percentage points per quarter. And so far, this quarter is not looking that different. The headline beat, is close to basically 20%. A big chunk of that is the loan loss provision. So we're still talking about, in round numbers, about a 10% beat. So, beats are slowing. The bottom-up consensus has moved up. But as far as tech earnings go, I think the main issue here is, as you're well aware, the mega cap growth in tech companies have, very strong secular growth in their earnings. There was clearly some front loading, especially what you saw basically in the first quarter, a big move up, above about 20-25% above their prior trend that's been in place for 7 or 8 years. And so the big question really is whether that was a pull forward and we're now going to go slower and revert back to trend. And I would argue that if you aggregate the bottom-up consensus, that's really kind of the picture that, they have. And so we shall see. If you look at the broader equity markets and multiples, and of course, this also applies to mega cap growth in tech. I would argue that, the market's sort of pricing that, the huge upgrades in earnings that we've had. Right. Like I said, the beats of 15 or 20% a quarter are going to continue forever.
Let me translate that. He says, don't get out of triple leveraged all cash.
Stay where you are, Tom.
Stay where I am.
44.22 on the S&P 500. Binky, we started this hour by talking about where we started last year. For these calls going into this year, it was the first week of November. When you came out with 39.50, and I understand it's now 4,100 year end on the S&P 500. I also understand that a forecast by definition cannot be wrong because it is a forecast and we still have 4 months left on the calendar. I just wonder, so far through 21, Binky, what has surprised you? You were bullish. Many people were bullish, maybe just not bullish enough. What surprised you to the upside?
At the end of the day, I would say it's basically two things. It's number one, it's earnings and how strong they've basically been. And number two is, sort of how the market is treating those earnings and where we are basically in the cycle. I think it's important to keep in mind that this cycle has basically been proceeding, very, very fast, especially if you look at corporate America and where earnings are. If you look at things like GDP, you would say, the cycle's got a long ways to go. We're still waiting for Q2 numbers, and that might put us above pre-COVID levels, look at it, things relative to sort of the trend in GDP, and we're still 3 or 4% below. And that suggests, there's a lot of upside for recovery. You do this for the S&P 500 at the industry group level. We've done it for 53 industries that sort of, cover the S&P 500. And I think that, the very stark, loud conclusion is that if you look at activity variables and revenue for about 2/3 of the S&P 500, we are well above trend levels already. So I think, this sort of characterization does a very good job of explaining why the equity markets have done as well as they've done. And so, the big question is, where do we go from here? Do we slow? Do we actually start to see negative growth?
And again, Lisa, what's so important here is I should stay in triple leveraged all cash.
Thank you. Thank you, Tom. That's important to know. There are a lot of people still in triple leverage all cash. And that's actually, Binky, where I wanted to go. This idea that there is so much, and I hate this phrase, but cash on the sidelines here as people aren't fully invested yet. That is what so many people said. Really? How much will that spur valuations to even higher heights, despite the fact that all of this is already priced in?
Yeah, so I think it's really more about sort of, where multiples and earnings are as far as the cash argument is concerned. I mean, I think it was a very valued argument at the middle of last year, and we made the argument at the time. But now, if you look at cash levels and you look at it relative to the market cap of the S&P 500, it's actually on the low side as opposed to being on the high side. So, yes, I mean, in absolute amounts, there's plenty of cash, but what is the buying power, relative to the market cap of the S&P 500 is actually very low, I would say.
So, Binky, do you and the team get around the table a little bit later this afternoon after the close, go through these three big names and work out what's next for that forecast? Is there a rethink after the close today?
Yeah, I mean, I think that, this recovery has been like no other. I think, the principle has been to remain flexible. I mean, if you told me, 15 months ago that we were going to have 4 quarters of 20 percentage point beats in S&P 500 earnings, every quarter, I would have disbelieved you. But that's, exactly kind of where we are today.
Binky, thank you. Appreciate your time. Binky Chowdhury there, Deutsche Bank Chief Global Strategist on this S&P 500 on a big afternoon coming up stateside with the likes of Apple, Alphabet, Microsoft on deck, Tom, with earnings. I just want to get to a headline. It comes from CNN, citing a source. A federal decision on a mask mandate is imminent. This just coming from CNN, citing a source. A federal decision on a mask mandate is imminent, Tom. So expecting some news imminently, according to CNN, on that front.
And of course, Dr. Fauci's talked about this. You really wonder what that could be. I mean, what the details could be after what we saw from New York City and California yesterday.
We were told there was an active conversation. We understand that's happening. Lisa, we already knew that. Now we're waiting for an actual decision on it. And to Tom's point, there seemed to be an effort to leave this to local leadership. Maybe that's not the case.
Well, and that's been the case for a long time, that pretty much all of these policies have been left to localities. My question is, if they do come up with some sort of mandate, does that set them back from popular opinion standpoint? Because we have seen those protests around the country, around the world, frankly, about some further restrictions. You do wonder at this point whether people will just get more angry about this and protest.
Well, before jumping to judgment, guys, I think we've got to be clear. We don't know what that decision is.
Yeah, but
just
John,
according
to
to a source,
point,
there will be a decision.
John, you alluded to it earlier. I mean, the political heat. If they institute a federal mandate, to me, that's unimaginable.
Well, especially Tom and Lisa's alluded to this point, for the vaccinated. An extra layer of restrictions for the vaccinated, that could be pretty complicated in this country. So that's the news. We don't have the news yet. Just a report. It's from CNN.
We like to get out
a
front
source.
of the news.
A federal decision on a mask mandate is imminent, according to CNN, citing a source. Maybe we will have some actual news a little bit later. Just wanted to bring you the headline before we jump to conclusions. Equities down 8 on the S&P. We're negative 0.2%. You did too. Your 10-year yield, 125.28. Yields in 3 basis points on 10s. From New York, this is Bloomberg.
With the First Word News, I'm Laura Wright. The two Koreas have improved the prospects for a breakthrough in those stalemated nuclear talks North Korea's Kim Jong-un and South Korea's Moon Jae-in have agreed in letters to restore relations. They released what appeared to be coordinated statements calling for reconciliation on the peninsula. That happened on the 68th anniversary of the armistice that halted the fighting in the Korean War. In Tokyo, a grim new record. The number of new coronavirus cases in the Japanese capital hit a record today, more than 2,800. The surge comes as tens of thousands of visitors are in Tokyo for the Summer Olympics. Only about a quarter of Japan's population are fully vaccinated. Stunning news from the Summer Olympics in Tokyo today. Reigning gymnastics champion Simone Biles is out of the team finals after apparently hurting herself during the vault. The US star is widely considered to be the greatest gymnast of all time. Her absence will make it difficult for the American team to claim a third straight Olympic title. China's Tencent Holdings is suspending new user registrations for its WeChat services. That adds to uncertainty for the tech sector that's in the midst of a two-day sell-off. Investors have fled Tencent and its internet peers after China announced its toughest ever curbs on the online education industry. Beijing also issued a series of other edicts governing illegal online activity. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Laura Wright. This is Bloomberg.
We're on the verge of having platforms and companies that are so powerful and so influential in the political process that they're ungovernable. China has realized that this poses an existential threat to governance and law, and they've decided they have to stop it. We haven't gotten there yet in the United States, and I hope we get there soon.
Wonderful to catch up with Paul Romer there, the Nobel laureate and NYU economics professor from New York City this morning. Good morning, alongside Tom Keene, together with Lisa Abramowicz. I'm Jonathan Ferro, and here is your equity market this Tuesday morning. Into Tuesday at all-time highs on a 5-day winning streak. Your S&P down 9 points. Call it 10. We're negative 0.2%. Yields in 4 basis points on 10s. Your 10-year yield 125.11. Euro just a little bit stronger here, firmer. Briefly, some euro strength, 118.11, up by 0.1% there. Positive 0.1 on that currency pair. And just finally, Tom, crude unchanged, 71.91 on WTI. Going into a huge amount of earnings we're expecting after the close. I say huge, I'm talking about market cap. It's just three names, and they make up a quarter of the NASDAQ 100. It's Apple, Alphabet, and it's Microsoft too.
We're going to stop now and look at Apple. Will Power with us, with Baird, the senior research analyst, with a terrific note. And what's so great about Will Power, at the bottom of his note, he shows you his belief in his track record from another time. This is a guy who just before COVID, just before the pandemic, was outperform on 90, and Will Power sustained that outperform through thick and thin. Will Power, you sustain your outperform today. Simply, can Beijing upset the apple cart? Can Beijing, all this upset in China, derail your outperform?
Well, Tom, that's a great question. Good morning. Thanks as always for having me. Great to be on the show here. Look, China's always a big wild card, and at least at this point, has still been a big driver of Apple's results. And we're still not expecting that to change near term, but it's certainly something we keep an eye on with all the tumult that's underway in that country with respect to other tech companies. But at this point, Apple's been able to navigate that market fairly successfully. And of course, that's just one piece of the puzzle for Apple as you think about the broad-based strength we expect again, this quarter.
Well, as you know, the cheat guide to Apple over the last decade is just to buy it, to keep buying it, and then to keep buying it. It's complex on one front, though, and I've always struggled with it, and I'd love you to guide me through it. What multiple do you put on a name like Apple, given the evolution of this company over the last 10 years?
Well, it's a great question. It's been one of the central questions, and I think a linchpin of probably if there's a bear thesis, is probably on the valuation accretion and multiple expansion that's occurred here over time. Look, we played a long game with Apple, right? And our view over a long period of time has been it'll continue to grow into valuation, and you're betting on their ability to continue to add new value-added services and solution for end customers. and that in turn continues to drive more shareholder value. Our view is that it increasingly falls into the consumer staples camp, right? So that it's not a name that you can really comp against traditional big cap tech per se. And as you start to look at consumer staples names, it's we think you can justify multiple to get you closer to 30 times, which ultimately is what we're currently using to get to our $160 target price.
Well, this is an important point, the idea that you emphasize services. Does that mean that at this point, people are basically not looking for Apple to necessarily innovate with the Apple Watch or some other product, that really it has to do with ongoing revenues from either iPhone sales or from the services that you can get on the iPhone that will determine the future revenues?
Well, I think that's a great point. And look, I mean, services now is 20% of revenue. It's growing north of 20%. It has a much higher than average gross margin at close to 70%. And that's a big part of the story in terms of driving higher multiple than what it had traded at historically. And our expectation is that can continue. Look, I mean, I think just last quarter reported close to 660 million paid subscriptions on the platform. That's a number that continues to rise by 40, 50 million, every quarter. And that's why it's critical that services like Apple TV Plus and things down the road continue to take off, because that helps drive that line of business for them. But of course, that's just one piece of it, right? The key to the story has been the consistent diversification beyond iPhone, which is now down to a little under 50% of revenue, but still, of course, the linchpin to the story and a big driver near and medium term still.
Would you like to see Apple become a media company? I mean, there's been so much speculation about their buying, let's say, a Netflix or some other big service provider that way to enhance their Apple TV. Is that still on the table?
Well, I think Apple TV Plus is very much on the table, as you know, right? Ted Lasso, of course, has been a great show. But they need a few more hits like that. I think at this point, it doesn't appear they plan to buy a major media company to kind of jumpstart that effort. I mean, look, hindsight's always 20/20. Perhaps they should have done that. Perhaps they should have looked at something in the autonomous vehicle market. I think these are all things of intense interest as you go forward. Look, at the end of the day, part of the bet on this and the bet on the valuation is that this is a true platform that they can build off, right? And services and media are, key elements of that.
And now for William Power, for those of you on radio, we get out the HP 12C. Okay, you don't do a sum of the parts on Apple, but you do extrapolate out to some form of estimate off of $5.10. If I'm the gloomiest Lisa Abramowicz gloomy on Apple that I could gloomily possibly be, I would do a 15% gross up on this. If I do that 24 months out, Will Power, I'm at $202 a share with a $3.4 trillion market cap. Is that feasible?
Look, I think that's possible. I mean, at the end of the day, I think part of what's going to happen here, Tom, is, as I said earlier, they're going to continue to grow into the multiple. And my expectation is, while we may not have the level of beat we had this past quarter, I think there's still nice upside to current estimates, both this quarter and as you move into the fiscal Q4. And look, one of the key things to keep in mind, we haven't really touched on, this 5G cycle is still super early, and it may not be the massive super cycle in year one. But if they've just sold over 100 million iPhones that are 5G capable against a global base that's close to 1 billion iPhones, that's a big upgrade opportunity still for multiple years.
John, that pause that Will Power gave you when I asked him that question is known as the general counsel pause. That's because he's really not supposed to extrapolate out 24 months.
He's got the notes written down, Tom.
Is my badge at Baird going to work tomorrow?
How to respond and what to respond to and what to ignore. William Power's going to go now. Baird Senior Research Analyst. Will, great to catch up. Appreciate your time, sir. William Power of Baird, looking for 160. That's the price target from Baird on Apple. An outperform rating. 35 buys on Apple. 8 holds, 3 sells. Lowest on the street, Pierre Ferragut of New Street. Surprised to see him down there with a sell, Tom. A 90 price target.
Yes.
At the close yesterday, just south of 150 on Apple.
And I got it out.
3, 2,
I
1.
Go.
Mike Q, live.
An articulate bear is what he is.
A what? An articulate bear?
Yes.
Okay.
He's very, very good. With great respect, I listened to him.
That was great. And please, we reset the show for that. Bit of news coming from the US gymnastics team. The official statement reads as follows. For anyone following this, and I know many of you are, Simone Biles has withdrawn from the team final competition due to a medical issue. She will be assessed daily to determine medical clearance for future competitions. At least they go on to say, thinking of you, Simone, and I think it's fair to say we all are.
I was just going to say the exact same thing. A tremendous athlete and a tremendous figurehead for both gymnastics and the broader world.
From New York City, your equity market is negative 0.2%. Heard on radio, seen on TV. This is Bloomberg Surveillance. Live from New York City for our audience worldwide on TV and radio alongside Tom Keene and Lisa Abramowicz. I'm Jonathan Ferro. Your equity market -9, down 0.2%. Waiting for some economic data in the United States of America. 8:30 Eastern. Here are some of the numbers. With that data, here's Mike McKee.
Good morning, John. Well, we have an 0.8% increase in durable goods orders, which tells us that we're not adding to stocks as quickly as they thought possible, because the estimate was for 2.2%. Last month was 2.3%. The standard caution here, of course, is that durable goods orders are very lumpy. Durables ex-transportation up only 0.3%. So I'm guessing that transportation equipment was the big push for what we did get, the 0.8%. Capital goods, non-defense, ex-air, up 0.5%. That's the one that is basically the compilation of business orders that go into GDP. That is much better than the prior month's 0.1%, a little bit lower. Although we just got the revision, it was 0.5%, so basically no change. 2 months in a row of 0.5% gains in capital goods. Shipments up 0.6%. They were up 0.9% the prior month, so a little bit worse there, which will weigh a little bit on second quarter GDP, but overall, capital goods up at a reasonable pace. The problem is here, we expected more.
Durable goods durably fall on my foot and hurt it, to steal from Dennis Gartman this morning. Does this data, boring as it always is, but does it signal to you the shift from the goods sector to the service sector?
It could. It's hard to, without looking at the entire breakdown and looking over a couple of months, to know, but we do expect that in terms of just consumer spending, that's happening, but it's the business spending that people are concerned about. What's happening with inventories as companies try to build things up again. And inventories did increase almost a full percentage
John
point.
Farrell broke yesterday worldwide the Goldman Sachs story, the idea of a delay here in service sector build-out. Interpret their delay in service sector build-out not to this single durable goods idea, but to the goods boom in America. Translate that.
Well, it's just that Americans spent so much money on goods going into or during the pandemic that now they can go out and spend money on services like going to restaurants or going on vacations. And so that pulls the money over there. The question is, how quickly can the service industry ramp up? And I'll give you a personal anecdote.
Oh, here we go.
Dealing with an airline that will be unnamed, had a problem that they caused with my ticket for an upcoming trip, and it took me 7 hours to get through to a customer service agent.
You were on hold because Ferro was in front of you on that call right now. John, you've had the same problem.
Does it have the same name as a COVID variant, Michael McKee? That's what we want to know.
It just might.
Just wondering. Okay, Michael, thank you for that.
Very good. Michael McKee,
on the
thank you so
data
much.
and the troubles of traveling in the United States of America. Equity futures, Tom, down 0.2%.
Yeah.
Yields come in just a little bit off the back of that downside surprise. 124.28 on 10s. Yields in 4 or 5 basis points.
Housing data coming up, and then consumer confidence as well. Now to translate, Neil Shearing with us, Capital Economics, our group chief economist as well. Neil, what's your mystery of Q4 and into Q1 of next year? Do you have any sense of it, or do you just have to wait?
Well, the situation with the virus, of course, and the pandemic is changing very quickly. We're going to get Q2 GDP data later this week. In many respects, the market will be focused on that, but it's already old news, of course. The Delta variant since then has taken off in parts of Europe, concerns it might be spreading the other side of the Atlantic. So in many respects, it's very difficult to know exactly where we're going to be at the end of this year and going into next. With all that being said, I think, and we've seen more evidence of it in the June durable goods orders that we've just said, as you said, a bit soft. Growth is going to slow. To some extent, that's a bit inevitable, though. The point is that the economies have already bounced back a long way. We've already had the V-est of V-shaped recoveries. So it's inevitable that I think the growth is going to come off the boil over the coming quarters.
Now, we've got a case study for how things play out with the COVID variant, the Delta variant, and what that means for the economy. What are we learning about how this is playing out in the UK?
Well, exactly. We've got the UK, we've got Israel, we've got a few places we can look to. The key thing is the extent to which vaccines are playing a role in breaking the link between, or weakening the link between, infection rates and hospitalization rates and deaths. And in the UK, there's been some extremely encouraging news on that front. Normally, we saw this kind of 2-week delay between infections rising, then hospitalizations go up, and then deaths go up. Whereas this time around, we've seen a huge spike in infections. They've been falling over the last 4 or 5 days, but before then, they've been really rising. But hospitalizations didn't rise. The NHS has not buckled under the pressure and the strain yet, and the government has pressed ahead with lifting restrictions on economic activity and movement. And of course, it's those restrictions that are important for the economy. So the case study so far is that vaccines seem to be working. The problem, of course, is that there's a huge disparity between vaccine rollout rates in different economies.
Is there a reason then, based on what you're seeing? And of course, a lot of this will come down to the tolerance of individual officials in different jurisdictions. But any reason, as far as you can see, Neil, that would lead you to downgrade your economic forecasts?
Not on the back of the Delta variant and not for developed markets. I think emerging economies are in a very different position because of the point that they've been much slower to roll out vaccines for all the reasons that we know. They've struggled to get hold of supply. The actual rollout, once they have got hold of supply, has been slower too. So I think emerging economies are much more vulnerable to not just the Delta variants, but other mutations of the virus. But in developed markets, it's a downside risk. It's pushed back perhaps the recovery in the UK by 4 to 5 weeks, something like that. Not enough at this stage. It's a rounding error, so not enough to fundamentally change our forecast.
Neil, ahead of this week's GDP reading, there is a question about the distinction between inflation and growth and how these are not necessarily synonymous. People expecting growth to return to the trend line pre-pandemic by the end of next year. However, inflation still remains the wild card. What's your sense and why are you worried about stagflation? I'm laughing because I know I'm going to get slammed for even bringing up the S word.
Well, exactly. We've said there's a whiff of stagflation rather than we're not kind of jumping all on the stagflation bandwagon yet. I think that it's important to distinguish between what still look like, I think, some temporary frictions in the system in terms of getting the economy back to work. Don't forget, we shut the economy, the US economy shut down for a couple of quarters last year, and we're just about to trying to get all these people back to work, millions and millions of people back to work. It's inevitable that there will be restrictions. There's been a huge rotation, you covered it earlier, in people's consumer spending habits from services to durable goods and then back again. So it's inevitable there will be some restrictions, and those restrictions on the supply side are now more clearly holding back output growth. And of course, one way they manifest themselves as well, because demand is strong, is in higher prices. So that is the essence, I think, of stagflation. This is not the 1970s stagflation. This is a very different type of stagflation, I think.
Well, this is a really important point, especially having to do with the deglobalization that we're seeing in some ways, with trade very much in the forefront of talks between the U.S. and China. How much is this still an underappreciated fact when people take a look at inflation expectations over the next few years?
Deglobalization, I think actually 3 or 4 years ago, we were talking about deglobalization. The world has had peak globalization. Trade measured as share of global GDP was topping out, perhaps capital flows too. I think that debate has now started to shift away from deglobalization and towards decoupling, US-China decoupling. This is not necessarily about the world deglobalizing now. It's about the world's two largest economies decoupling in many areas, not just trade, but also in finance, investment, security, defense, technology. In all of these areas, the US and China is decoupling. Now, I don't think that's necessarily a huge source of inflation. The biggest risk, in my view, to inflation is what's happening in institutions and in the Fed in particular. That holds the key in all of this. But it's certainly not helpful if we then see less globalization too.
Neil, with the meeting tomorrow, has the story changed? Has the news flow changed what we will hear from Chairman Powell?
I don't think it's fundamentally changed at this stage. I think it's pretty clear now that the best of the recovery, if you like, is behind us in terms of those big month-on-month Q-on-Q gains in output. I think perhaps some of the concern over inflation has has eased a bit too. I think, and obviously what's happening in markets is fundamentally, that's the bit that has changed. Real yields obviously now at record lows. The Treasury nominal yields coming down too. So I think the Fed is probably looking at the situation now and thinking we're sitting pretty at this stage. The bond market seems to believe them. Inflation expectations are not getting out of hand. The stock market is holding up, and the economy, although it's lost a bit of momentum, the recovery's lost a bit of momentum, it's still going. So I think it's steady as you go from the Fed tomorrow.
Neil, good to catch up. Neil Shearing, Capital Economics Chief Economist, the Group Chief Economist, on the data we've just seen in the last 15 minutes. Here's the price action for you on the S&P 500. Slight decline, negative coming into Tuesday morning on a 5-day winning streak and a record high on the S&P. We're negative 0.2%. Yields are in 4 basis points, 124.44 on a US 10-year. Euro dollar positive, about 0.1%. Euro dollar 118.14. That's a slightly stronger euro. Crude negative 0.2% to $71 and about 76 cents. The conversation on an equity market at record highs continues at the top of the hour. I'll be catching up with Jonathan Golub at Credit Suisse, the chief US equity strategist and one of the biggest bulls on the street, Tom, looking for 4,600. And let's be clear, at 44.22 on a close yesterday, we're not too far away.
Folks, you're really going to want to stay to see that conversation, because this is a nuance. It's not just about coming out with a number like 4,400 or whatever, and somebody, John's going to be out at 5,000, and everybody in the media is going to lather up. Guess what? It's about the nuance of it, and Golub writes a sector-based, exceptionally acute note about the nuances of what to do, and John, at the same time, is a bull, what not to do.
Where do you want to be beneath the index level?
Yeah.
That's the conversation for later. Alongside Tom Keene and Lisa Abramowicz, I'm Jonathan Ferro with your equity market just a little bit softer this Tuesday morning, pulling back from all-time highs perhaps on a 5-day winning streak on the S&P 500. Equity futures slightly negative. From New York City, heard on radio, seen on TV, this is Bloomberg.
With the First Word News, I'm Laura Wright. Well, federal health officials reportedly are close to announcing whether there will be new guidance on wearing masks. According to CNN, a decision could come today. 2 months ago, the CDC said most people who are vaccinated could go without masks indoors. That could change because of the highly contagious Delta variant. On Capitol Hill, those talks to come up with a bipartisan infrastructure spending bill have run into a number of obstacles. Senate negotiators ended the day still trying to resolve differences over transit funding, water projects, and how much unspent COVID money can be used to pay for infrastructure. Lawmakers insist an agreement is still possible. Second quarter earnings at United Parcel Service beat expectations. Give the credit to a jump in e-commerce deliveries, UPS and FedEx, and racing to profit from the rise of online shopping during the pandemic. The challenge is that carrying packages to homes is usually left profitable than serving businesses. Shares of General Electric are rising. Growth in GE's jet engine division prompted the company to raise its cash outlook. That's led to optimism that improving air travel will give a boost to CEO Larry Culp's turnaround efforts. The petrochemicals division at ExxonMobil is supercharging its financial turnaround. The often overlooked segment of the oil giant's business will probably post record high earnings this week. That's because of the surging prices for plastics. Demand for products such as packaging and materials for flooring held up during the pandemic. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Laura Wright. This is Bloomberg.
And so on September 13th, which is the first full day of school, every single city employee will be expected to be either vaccinated or be tested weekly. This means everybody.
We welcome all of you on radio and television worldwide. The mayor of New York City, Bill de Blasio, of course, his term migrating to an end here in early 2022. There on the story of the moment in a widely vaccinated, widely healthy New York City. The rest of the nation, a different story. Joining us, Anne-Marie Horton out of Washington, our Washington correspondent. Lisa Abramowicz with me as well. Anne-Marie, John Ferro mentions a CNN headline of what could happen today. Who's driving the bus at the Biden administration? Who are you focused on this morning?
Well, it's definitely the COVID task force, Tom, when it comes to who's driving the bus. The Biden administration has continuously said that they would look to the scientists as well as the CDC, of course, and of course, Dr. Anthony Fauci on whether or not to move some of these mandates. Now, we have known for a while that they were discussing potentially to bring back mask mandates. This would likely to be in the federal government system and then encouraged across the nation. And this is because of the rise in the Delta variant. What I think is even more interesting is the memorandum that came out of the Department of Justice. That memo was supposed to be out July 6th. It came out on July 6th, but they made it public now because they want to let people know and private employers know and states know that it could be legal as they view. It doesn't mean uphold in court, but there is also a debate about whether or not they're going to make vaccinations mandatory.
Very good. Amber, you got to leave it there now. Coming to us, Mr. Brady of Texas, Kevin Brady, of course, a Republican from Texas, and far more than that, I should say, one of the clearest thinkers on the Republican side on what is correct away from the federalism of this nation. Kevin Brady, I want to take you down to your Woodlands, down to Houston Methodist Hospital, and Kelty Baker, the head of medicine at that wonderful institution. I want you to explain how you dovetail Dr. Baker's science with the tone here, not of anti-science, but the tone of doubt that we see nationwide among the unvaccinated.
You know, I know this is frustrating. I am vaccinated, have been urging my constituents and neighbors to do the same. It is a difficult argument to win, frankly, with those who are unvaccinated. I think at the end of the day, it comes down to genuinely, for most, you know, they don't know that this is safe yet. Right. I think many of them are telling me, you know, get out of the emergency authorization, make that a permanent safety decision. I think that will help some, if not all.
Congressman Brady, you had great support for Donald Trump. He got vaccinated quietly without fanfare. What do you need from your guy right now to change the trend of the unvaccinated?
Yeah, I think the key thing here, obviously, reward people for being vaccinated. We're seeing in places like Houston where they're actually asking the vaccinated to mask up to protect the unvaccinated. I think that's probably the wrong incentive. Secondly, I think we need a permanent authorization for those vaccines and a lot more consumer education, certainly in our area. I think that would be key. So we're seeing, you know, more of this Delta in some of the variant. We're also unfortunately seeing that coming across the southern border, which is troubling people in a big way as well. So I'm hopeful we can keep making progress. But I'll tell you, too, I think President Biden and Vice President Harris did the country disservice during the campaign, essentially planting the seeds of doubt on the vaccines developed under President Trump. And I think that
okay, I'll give you that. Okay, Congressman Brady, please. I'm going to give you that idea that they planted the seeds of doubt, and it was part of the campaign as well. But you didn't answer my question. What does this nation need from the former president right now to explain to the Jacksonian unvaccinated that they need to be vaccinated?
Well, I think President Trump has been clear about this. He has talked about the need to be vaccinated. He's talked about the remarkable success in bringing these vaccines to market in record time. So I will tell you, I think it is this president and vice president who bear the burden right now. And I'll tell you, I'm willing to help and eager to help. I've been preaching this back home in a big way, especially as we see these new variants coming forward.
Representative, there is a huge delta, and forgive me for the pun, between Republicans and Democrats when it comes to the vaccination rates. And actually, in more heavily Democratic areas, the vaccination rates tend to be much higher, and people tend to be more open to getting vaccinated. How is it that you see President Biden playing a big role in shoring up confidence in vaccines if it's largely the Republican regions that still show doubt?
Well, I'll tell you, it was early on, it was the Democratic regions where the problems were at it. Everyone criticized President Trump for that. I think, frankly, to be fair, this president now in the administration bears the responsibility and certainly, perhaps for the first time, bring both parties together on this mission, because I think it is so important. Right now, again, it's frustrating for those of us who think we should find common ground here to have this just go it alone mentality. I'm a little frustrated with it, but we have to keep making progress, and it's not going door to door, not mandating. I think we can do more of it. I think we can do better.
All right, in just 45 seconds left, Congressman, I'm wondering, you talk about bipartisanship and bringing people together in Washington. What's your chance, in your opinion, based on your Republican colleagues, of having a bipartisan agreement in the very near term on this $1 trillion infrastructure spending package that so many people seem to support, whatever side of the aisle that they are on?
Yeah, I think we're all hopeful that they can find common ground here. We haven't seen much of the details, but I think we're encouraging people to find common ground. I'm less optimistic about the votes for it because clearly the Speaker, Pelosi, and Leader Schumer want this to be the pilot chute that pulls along that $3.5 trillion massive expansion of the welfare state. There won't be Republican support for that. If they were truly separated, if one went forward, period, I think there'd be strong support for infrastructure. We ought to get it done.
Kevin, thank you so much. Kevin Brady with us of Texas. Greatly appreciate it. The congressman from the Woodlands as well. Lisa, I want to pull back to the markets here with the Fed meeting tomorrow, earnings this afternoon from the others. And, I look at the market and I'm sorry, there's a resilience to it. There's a bid underneath stocks.
And the issue to me is that we are seeing very strong earnings. I'm not going to knock the strength that we're seeing both in the bottom line of a lot of these companies as well as in the overall economy. The question is just, where are we in the cycle? How much more room do we have to continue accelerating, and what's currently being priced in? And I do wonder, especially given where real yields are, what could make the bid into stocks change, really? I mean, look at that negative real yield.
It's a very important point. When does the bid change? And what we know from history is when it changes suddenly. But to me, and again, we heard this from a number of guests, it goes back to what the Fed does. Marty Zweig, don't fight the Fed. Are we going to have a fight Are we going to have a Fed that fights today, Lisa? I don't think so.
Are you going to be buying the next iPhone in the near future? That's what we're going to be talking about tomorrow.
Well, yeah, exactly. I mean, you know the answer to that.
How many?
How many? I have to buy I'm mandated for school to buy a laptop for Apple thought.
Really? An Apple mandated laptop?
It's like one that Jeff Bezos took up into space. I don't. Stay with us through the day. Important a day on economics, finance, investment on radio and on television. Stay with us. This is Bloomberg.